25% of the original cost. We know how to do that now. We don't have an excuse to get into it.
Does it need to be cheaper than oil and fossil fuel for it to be viable worldwide?
Well, right now it is. Okay, so let's just swallow that bit of financial data. Right now it is cheaper, and it's getting more cheap. It's the only fuel you know
Mr. Force,
is declining in value.
You don't have enough of it, right, to power the world?
Yes. That's only because we haven't had policies to support it. If we had policies to support it 5-10 years ago, it would be everywhere. You'd see the global warming budget start to come down.
Yeah.
Now, we've got 5 or 10 years to make a huge difference. I need policy leaders all over the world to appreciate now, okay, big business is transacting with green hydrogen in multi-billion-dollar agreements. Right. We now know it's here and it's here to stay. Let's spread it everywhere.
Coming up on the program, the hydrogen revolution. We'll speak with the CEO of Italian utility firm Snam about his new book and why he thinks green hydrogen will be competitive in just 5 years. Plus, how are airlines working to become more sustainable? We'll look at how Airbus plans to step up in the climate fight. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the Snam model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, 600. Today, 100, and we see it going down to 50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia's very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course, you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big, big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working in that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets. and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lines from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
Direct payment for working class families to be able to weatherize their homes, to save them money, to keep them warm in the winter and cool in the summer. It's a direct grant. This program has been around for a while, and in the past, it's delivered to families, average families, another $327 in savings when they weatherize. But now we have the ability to reach 10 times as many families because of the legislation that we already passed in the legislation. In addition to that, we're also setting new standards to boost fuel economies for new vehicles sold in America. Within 5 years, we're going to travel 10 miles more on every single gallon we have because the average fuel economy of 49 miles of the gallon is going to be required. That means hundreds of dollars in savings for families at the pump. We're also setting similar standards for appliances, from your air conditioner to your microwave, your refrigerator, washers, dryers. It's just one of 100 actions we're taking to save the average family $100 per year in utility bills. Look, the bottom line is this. Between ramping up production in the short term and driving down demand in the long term, we can free ourselves from our dependence on imported oil from across the world. Look, I know gas prices are painful. I get it. My plan's going to help ease that pain today and safeguard against tomorrow. I'm open to ideas to strengthen the plan, but I will not be put off and put it on hold. It's time to deliver true long-term energy independence in America once and for all. And I'm going to continue to use every tool at my disposal to protect you from Putin's price hike. It's not time for politics. Americans can't afford that right now. So let's meet this moment together. Remember, we're the only nation that has turned every crisis we ever faced into an opportunity. We have a crisis, the price at the pump. So let's show some true strength in this nation, show our unity, our resolve, our innovative spirit in America, and come out of this long-term much better off. If we stand up to the bullies of the world, the autocrats and dictators, we stand up for those who are ready to unite with us, United States of America. So may God bless you and may God protect our troops. Thank you.
Mr. President, how badly is Vladimir Putin being misinformed by his advisors?
That's an open question. There's a lot of speculation. But he seems to be, I'm not saying this with a certainty, he seems to be self-isolating. And there's some indication that he has fired or put under house arrest some of his advisors. But I don't want to put too much stock in that at this time because we don't have that much hard evidence.
Mr. President, how much in monetary terms do you estimate today's announcement will reduce gas prices, and when can Americans expect to see these changes?
That's a really important question, and there's no firm answer to it. But prices already came down when it was announced ahead of time that Biden was going to release so much energy from so many barrels of oil from the SPRO. They're already come down. My guess is we'll see it come down, continue to come down. But how far down, I don't think anyone can tell. And there's going to be a slight delay because if you go out there and you're a gas station and you purchased X amount of gas at a certain price, you're not going to lower the price of the pump until you're able to get back what you invested. And that I'm talking matter of, I think, days and weeks. But it's hard to tell. And the other thing is, but it will come down. And it could come down fairly significantly. It could come down the better part of, anything from 10 cents to 35 cents a gallon. It's unknown at this point. I'm also waiting to see whether or not our allies exactly how many barrels they release from their supplies now. My guess is it could be as high, somewhere between 30 million to 50 million barrels. And the higher the number, the more likely the prices to come down. Thank you all very much. I appreciate it. Thank you.
All right, that is, of course, President Biden at the White House talking about a crisis at the pump and a time for the world, for the United States to show unity as expected. And this has, Tim, been the big story of the day. Welcome, everyone, live on Bloomberg, or in our interactive broker studio, I should say, and of course, live on YouTube as well. This is Bloomberg Business Week. We've been talking about expecting the Biden administration to release a massive release, if you will, from the Strategic Petroleum Reserve. And is the president going back?
Looks like he's walking back toward the lectern to actually answer a question. Our team is monitoring the audio. We'll bring it to you if he does end up answering more questions. But Carol, you were talking about the Biden administration's plan to release about 1 million barrels of oil a day for the next 6 months. The president saying that this is a wartime bridge to up supply until production ramps up, essentially saying that he's helping to push this as a bridge to the fall. He also said that he's authorized Carol, I know you were.
Well, you know what? President Biden's still making some comments. Let's take you all there back to the White House.
He has in the Donbass and continue to keep an eye on and try to move beyond the rest of the country. Don't know the answer, but it appears so far that he has not pulled all of the idea he's pulling all of his troops out from around Kyiv and moving south. There's no evidence that he's done that.
All right, we're seeing the back of President Biden. Forgive us. This is what
It was a head fake.
This is what news is about. It's happening in real time. And of course, President Biden there at the White House. This is Bloomberg Business Week. Carol Massar along with Tim Stenovic here in our Interactive Brokers studio, taking a few questions from reporters in the room. The big announcement, the Biden administration releasing roughly 1 million barrels of oil a day from its reserves. This is a massive move in terms of the energy markets. We've seen the pressure on WTI and oil in today's trade. He did take some questions, though, on Russia as well, Tim.
Yeah, he did say that there is some indication that Putin has put advisors under house arrest. The last question he was asked also before he headed out was a question about Russia. He said there is no clear evidence that Putin right now is pulling back forces.
Right. Remember, we saw some enthusiasm or optimism in the market earlier this week over talks between Russia and Ukraine. But again, the president taking some questions on that. Hey, folks, let's get you going. Let's get you set up on this Thursday with a check on your top business stories and that trade. Here is Charlie Pellet.
Hi, thank you very much. You heard the big story, Carol, right here on Bloomberg Radio. West Texas Intermediate crude now down by 5.5%. Oil have been lower in anticipation of the announcement from the president. Brent crude right now down 5%, 107.78 for a barrel of Brent. West Texas Intermediate crude below 102, 101.80 right now, down by 5.6%. You heard him live on Bloomberg Radio. President Biden ordering the release of oil from crude reserves in an effort to tame rising energy costs.
Today, I'm authorizing the release of 1 million barrels per day for the next 6 months, over 180 million barrels for the strategic from the Strategic Petroleum Reserve. This is a wartime bridge to increase oil supply until production ramps up later this year. And it is by far the largest release of our national reserve in our history.
And the president wants oil drillers to pay penalties when federal leases go unused in an effort to prod the industry into pumping more. Again, West Texas Intermediate crude now down 5.7%, falling $6.19 a barrel, 101.63 on WTI. Stay with Bloomberg for the very latest on oil right here on Bloomberg Business Week. Equities lower. We do have the S&P down 21 right now, down 0.5%. The Dow down 199, down 0.6%. NASDAQ down 86, a drop right now of 0.6%. Keeping an eye on the 10-year yield, 2.31%, 2-year yield, 2.29%, gold up 0.6%, 19.44 the ounce. And again, how the oil stocks are responding: ExxonMobil up 0.2%, BP down 1.4%, Chevron down 0.5%, EOG Resources up 0.1%, Pioneer Natural down 1.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stenovic.
It's okay. It's one of those days, Carol.
It started that way, right?
Yeah.
It started early for us. Let's get to the Business Week agenda. Michael McKee, international economics and policy correspondent at Bloomberg. He's in our 99.1 studio in Washington, D.C. Katie Greifeld, right next to us in our Interactive Broker studio. She's Bloomberg News senior markets reporter, Bloomberg Quick Take co-anchor. Katie, let's start with you. The trade, I feel like, has been kind of all over the place a little bit today. At least I'm looking at equities right now.
Yeah, if we look at the S&P 500, I mean, we were treading water for a lot of the morning, but it seems like now the line is definitely moving lower. You can see the S&P 500 down about 0.5% right now. Nearly half of S&P 500 sectors are in the red. Interestingly, even with this big fall in oil, you do see some resilience among the energy names, perhaps because they're all U.S. names, and we did have that big release. Maybe that will be good for U.S. production, but yeah, it definitely seems like it is a risk-off day.
Yeah, a big piece of the day, of course, includes the oil news we just heard from President Biden, the Strategic Petroleum Reserve release. Also, a lot of economic data coming in today. That's why we're also glad to have Michael McKee. Mike, come in on this and talk a little bit about the data that we got this morning. U.S. inflation-adjusted spending falling as prices temper demand. Are we starting to see consumers pull back because they're saying, wait a second, I'm not going to buy this thing because it's too expensive?
We may be. This is also incorporating some of the Omicron variant spike in the United States during the month of February. So it's a little hard to separate the two things out. We do know that the real personal spending, the inflation-adjusted personal spending, is an effect of inflation. And so that is a problem going forward. It's the kind of thing we're going to see. The good news is that wages went up 0.8% during the month, so the negative 0.4 was sort of canceled out. But again, the Fed is going to worry that that gets built into inflation. So the good news is bad news and bad news is good news.
So how are you thinking about things ahead of the monthly jobs report tomorrow?
Well, I think what we're looking for is another relatively healthy job gain. The Fed is going to be looking to see what happens with the labor force participation rate. We've been talking about that for a long time. Are people coming back into the labor force? Because if they are, it looks like they're getting snapped up as quickly as they enter the labor force. When you look at other indicators like jobless claims, well, that may ease some of the pressure on employers to pay more money. And the big wage increases we've seen may go down, and then that takes a little pressure off inflation. So that's kind of what we're looking for in this jobs report. Whether it's a really good or really bad number, the Fed seems already on track to do at least 25 basis points, probably 50 basis points on May 4th. So I don't think it's going to have much of an impact there.
Katie, I know you're always watching the bond market. The personal consumption expenditures price index data that we got earlier today, you noted that yields are actually falling after that data.
Yeah, it's interesting. That data was pretty much right in line with expectations, and right in line with expectations means it's well above the Fed's target. But if you look at the bond market right now, I mean, you're seeing yields fall broadly across the curve, especially at the long end. If you look at the 10-year Treasury yield, we were at 2.55%, 3 days ago, 2 days ago? We're at 2.31 right now. So it's been a big
So what's the
move
message?
lower in yields. I think the message is that there's already so much priced in terms of Fed hike expectations that you're seeing perhaps maybe some recalibration, some rethinking going into tomorrow's jobs report. It's going to be interesting to see if anything can change the needle, because if you look at expectations for the May meeting, I see about 44 basis points worth of tightening priced in. So there's not much more to go.
I don't know if you guys read the 5 things you need to know to start your day. It's kind of my must reads every day. But Joe Weisenthal kind of at the end had said, this debate over the yield curve inversion, is it important and is it a signal of recession? But Mike, come on in on this, because if we are seeing longer term that we expect rates are similar to what they are short term today, it's an indication that the Fed will probably be cutting rates down the road, a sign of slowing growth and momentum. Give me your thoughts on that and how we should be thinking about that, perhaps, or what you perceive in terms of his take on that.
Well, you can already see in some markets like Eurodollars that a year or so out, there are some people buying into the idea of a Fed rate cut. The Fed is going to try to slow growth, and of course the soft landing scenario is that growth slows without hurting the unemployment rate and sending us into recession. But if we do start to slow too much, then the Fed would stop raising rates and then eventually start cutting rates. I think it's a little hard to know at this point how this is going to go, because they've only raised rates once. And as Katie was talking about, we went way up on the 10-year note yield, and now we're back down again. We'll see a lot of volatility as the markets try to process all the information coming in and decide where the Fed is on all this. And part of the problem is policy works with a lag. And so we're not really going to know.
That's what I want to ask you. I spend time on the water. Everybody knows it. I spend time on a boat. And it's a sailboat that, when you want to try and stop it, it's not like you put the brakes on and it stops. So it's very easy, Mike, right, for the Fed to do a policy misstep.
Oh, it's very easy. And a lot of people have been betting on that. That's one of the reasons you see people pushing yields up, and the idea that the Fed is going to make a policy mistake, because they are trying to look 12 months, 18 months down the road and see what impact their policies are going to have. And it's really hard to do. They're going to have to look at alternative sources of data to kind of get a picture of where the economy is going and maintain some real good close contacts with people in the business world.
Katie, very briefly, last thing, last word to you. What are you watching next?
I would say I'm watching wage gains
tomorrow.
in the jobs report that we're getting tomorrow at 8:30. That's going to be fascinating.
Right, if you see any kind of easing, right, and how that plays into the inflation picture and kind of the narrative. Katie Greifeld, thank you so much. Bloomberg News senior markets reporter and Bloomberg Quick Take co-anchor here in studio. Michael McKee out there in our 99.1 studio in D.C. He's, of course, international economics and policy correspondent. He's going to be up at like 2 in the morning so that he's ready for the jobs report tomorrow.
He does it so we don't have to. So thank you, Michael McKee, for doing that.
We do listen in when he breaks it down.
We do. Well, let's stay in Washington, D.C. at our 99.1 studio there and get an update on world and national news from Nancy Lyons. Hey, Nance.
Thanks, Tim. President Biden says he's taking action to relieve the price of gas by tapping into the Strategic Petroleum Reserve.
Today, I'm authorizing the release of 1 million barrels per day for the next 6 months, over 180 million barrels.
President Biden says in 6 months, gas companies should be able to ramp up their production to meet the nation's needs. And he admonished some gas companies that are refusing to increase their supply so that demand soars along with their profits. Russia's war in Ukraine is posing a serious threat to global food security, as we hear from Bloomberg's Amy Morris in Washington.
About 400 million people are dependent on Russia and Ukraine for food, but now the world faces soaring prices, fertilizer shortages, and a potential loss of food production because of the war in Ukraine. Syngenta Group says even before the war, the world was facing a food crisis as prices continue to surge and hunger is on the rise. Syngenta says it's providing seeds and crop protection products to farmers around Ukraine for food production. In Washington, I'm Amy Morris, Bloomberg Radio.
Republican Senator Lindsey Graham says he will not vote for Supreme Court nominee Ketanji Brown Jackson. He expressed concerns about her record, despite supporting her confirmation as an appeals court judge just last year. The South Carolina senator's announcement today was expected after he criticized Jackson during her 4 days of hearings last week. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenevec and Carol Masser live in the Interactive Brokers studios in New York. Let's get to a market check. Here's Charlie Pellet.
Very much, Tim Stenevec, and let us begin with what is happening with crude oil. Lower now, continuing to decline, just above 101 a barrel, down now by 6.2%. We're talking about West Texas Intermediate crude. Brent, the global benchmark, moving lower as well, down 5.1% right now, down 5.76 a barrel, 107.69. Big news, you heard it live here on Bloomberg Radio. President Biden says his plan to release 1 million barrels of oil a day from U.S. reserves for 6 months will lay a foundation for the country to achieve independence from foreign energy suppliers. Stocks were at the low of the day right now. Stocks stumbling toward the first losing quarter since the pandemic bear market. Treasuries pairing the worst losses in at least 5 decades today. Oil slumping again. WTI, the big story, down 6.2%, 101.15 a barrel. 10-year yield 2.31%. 2-year yield 2.29%. Spot gold up 0.6%, 19.43 the ounce. We do have a Bitcoin moving lower by 3.5%, 45,629. S&P down 26, a drop there of 0.6%. The Dow down 239, down 0.7. Nasdaq right now down 98, a drop there of 0.7%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, much appreciated, Charlie Pellet. All right, we are watching the energy markets. Of course, we just heard from President Biden pushing the oil release, saying in his plan to release 1 million barrels of oil a day from U.S. reserves. That's for 6 months. It's really massive and aggressive, laying a foundation for the country to achieve independence from foreign energy suppliers. This is our new world order. As for WTI crude, right now, pretty much hovering near lows of the session, down about 6.25%, down almost $7. So let's get to it with our guest.
Julia Fenzeres is oil markets reporter for Bloomberg News. She's with us right now in the Bloomberg Interactive Brokers studio. Julia, a journalist asking President Biden, how quickly and how much is this going to lower prices at the pump? The president didn't really have a clear answer for that. Of course, it's market-based, but based on your research, based on your reporting, how much is it going to affect prices at the pump?
Right, and it was a good question because it's going to take at least 3 weeks for any crude future price to reach to the pump. And so taking that into consideration, you have to realize that there are, as you mentioned, other aspects going into this. It's also, we're going into summer driving season, and that in itself is ratcheting up demand. And so even with these higher crude amounts, there's still going to be high demand, and that's going to be the real problem. So yes, it probably will lower gas prices for a little bit, but traders and all of my sources are saying this is just a short-term Band-Aid solution. It's not going to help in the long term.
Well, the other thing that I had heard, and this was like going back a couple of months when we were talking about higher energy prices, I think this was pre-war, is that some states had added taxes. Like, you have to understand that there's a lot of things that ultimately go in to what you pay at the pump.
Exactly. And this is, no one likes higher prices. The consumers don't like it. Obviously, politicians don't like it. And so, to try to game the market and to try to lower prices like that, it's just not going to work. And we have to remember that the SPR is supposed to be used in emergencies. And so to use such a large amount to try to fix these high gasoline prices, a lot of people I've been talking to have been saying, well, you're just going to drain the SPR. How are you going to get all of that crude back? And then when there's a real emergency, that's a huge problem.
Well, he called it a wartime bridge to up supply until production ramps up. He did say that they will sell the oil at market now and then use that money to then buy oil back when the price, ostensibly goes lower. But I want to go to the production part because he called out oil companies. He was pretty harsh. What was your reaction to that, and what could they be doing right now to help ease this supply crunch?
What was funny about that is he's saying, it's a bridge until the production ramps up. But why would production ramp up in December and not right now? So it doesn't really make sense that he's saying it's a bridge until the winter when they start ramping up production. Because if companies wanted to ramp up production, they were going to do it now. And as we mentioned previously, companies don't really want to ramp up production for several reasons. One, this administration has not been friendly towards oil companies, so the idea of them ramping up production in the meantime just doesn't seem like a good idea to them. They don't want to be stuck like 2014 with all of these extra barrels when demand then lowers down, and it takes a while to ramp up production. So Biden was right in the sense that it does take a while to ramp up production, but they would have to have started months ago.
So what's the likelihood, if we take the big picture, especially if you consider the conversations and the aggressive ones that we've been having about a pivot towards more alternative energy? Again, like you say, I've seen, the rush up in the Balkans a few years ago with all of the fracking and everybody, just frenetic activity. But that's an area that's seen boom and busts. So what is the likelihood that companies do anything in terms of investments or opening up the spigots when it comes to increasing the oil supplies? Or how long, they're going to wait,
No,
right?
They're going to wait. And he even cited that there was one oil company that said, even at $200 a barrel, we're not going to drill more. There are some companies that...
Wait, slow down. $200 a barrel, and they still will not. So what is the break-even point, or what is the tipping point that says, okay, we're in this?
Well, part of it is right now the market is fluctuating so much. The volatility is so high, so it needs to be sustained higher prices. And I think that production, they're not seeing that. They're not seeing sustained higher prices. They're just seeing, okay, well, this is because of the geopolitical risk premium, and so it doesn't make sense for us to start ramping up and it take months for it to get on the market if prices are not going to stay elevated.
But isn't the geopolitical risk premium going to be something that continues for months?
It is sustainable, right?
Exactly.
I don't
see, and based on everyone we talk to, it doesn't look like if Russia were to, suddenly pull back from Ukraine, it's not like multinational energy companies would go back into that country or start buying oil to the same extent that they were buying it before.
That is a really good point. And it wouldn't be to that extent, but right now, the geopolitical risk premium, it's a premium. It is not necessarily pricing in exactly what's happening. And so that is the big issue, but I completely agree. It's not like we're going to go back to the before times, but there is going to be this easing.
Can you just explain something real quickly? We've only got about 40 seconds. I mean, there's different types of crude, right? So the strategic, the SPR, is the oil, the crude that we use at the pump?
No, and so that's the thing. We also need high refining margins. We need refiners to be able to turn that into gasoline, because they're not just giving out gasoline, they're giving out crude, and they're giving out sour crude, which is, well, we're not sure yet, but the first SPR when it was released, it was sour, which producers didn't want to buy because that's not the good type of crude. They wanted sweet crude. So we need to see what type of crude they're going to give us.
It's like when we were making a vaccine, like we were learning about so much. I think about how long we've been covering these markets, right? But it's something like a crisis that you really understand the intricacies of a market.
Do you prefer light sweet crude or do you prefer sour crude?
I'm kind of a sour crude kind of guy. Can't you tell?
There we go.
All right, Julia, thank you so much. Really appreciate it. Julia Fenzeras, she's oil markets reporter at Bloomberg News here in our Interactive Brokers studio. WTI crude right now down about 6.5%, down over $7, $100.85 a barrel.
We're going all in on oil this hour. Keep it here. You're listening to Bloomberg Radio, and this is Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. We're leaning in big time to energy, which, by the way, is the top-performing major industry group in the S&P 500 in this first quarter.
Looking.
I mean, man, it's like the one it was top last year.
I was going to say, how about 2021?
Yeah, exactly. But I do think about the changing dynamics. We just talked with Julia Fanzaris about the release of the SPR, but we're also going to get into about U.S. assistance to export LNG to Europe. It's not a quick fix, though, for the European area.
Yeah, in just a few minutes, we're going to be speaking with Paul Takahashi, U.S. shale reporter here at Bloomberg News. First, though, let's get a check of what's going on with these markets. Hey, Charlie Pellet.
Hello there. We are lower across the board. Energy, though, Tim, the big story, and the Dow, the S&P, NASDAQ are all declining. West Texas Intermediate crude moments ago dipped briefly below $100 a barrel. $100.35 right now, down 6.9%. President Biden says his plan to release 1 million barrels of oil a day from American reserves for 6 months will lay a foundation for the country to achieve independence from foreign energy suppliers. But how soon until it starts to affect gas prices? If you're driving right now, that's the answer you want. Julia Fanzaris covers oil markets for Bloomberg News. She was interviewed moments ago right here on Bloomberg Radio.
Even with these higher crude amounts, there's still going to be high demand, and that's going to be the real problem. So yes, it probably will lower gas prices for a little bit, but traders and all of my sources are saying this is just a short-term Band-Aid solution. It's not going to help in the long term.
And again, West Texas Intermediate crude right now down 7%, $100.30 a barrel. Stocks lower, S&P down 24, down 0.5, final trading day of the quarter. We have got the Dow down 0.6%, NASDAQ down by 0.6%. 10-year yield 2.31%, 2-year yield 2.29%. The number of patients in London hospitals testing positive for COVID-19 has risen to the highest in almost 2 months. In the U.S., the FDA this week cleared a second COVID booster shot for people 50 and up. Dr. Chris Beyer is a professor of epidemiology at the Johns Hopkins Bloomberg School of Public Health.
One of the big challenges we have is that only about 1/3 of Americans have had that third dose, or the boost after J&J. So the primary boosting is not going well enough, really, to protect against the next potential wave of BA2. So I think while we're encouraging people over 50 to get the fourth dose, we really need everybody else to get the third.
And coming up in just about 50 minutes, we will be hearing more with Dr. Stephen Breyer. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Vaccine stocks lower for the most part. Pfizer down 0.3%, BioNTech down 2.7%, AstraZeneca down 0.5%, Moderna flat on the day, J&J down 0.1%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. As we mentioned, we want to do a little bit more on the global energy story. There is so much going on. We did hear from President Biden earlier today, that massive release of from the SPR, Strategic Petroleum Reserve here in the U.S. to really ease strained supplies, bring down the higher prices in the United States. Last week, remember, Tim, though, the president also committed the U.S. to working with international partners to boost supplies of LNG to European countries, I think to about 50 billion cubic meters annually by 2030. Sounds pretty good, right?
It does, and that's really why we wanted to speak to Paul Takahashi, U.S. shale reporter for Bloomberg News. He joins us on the phone from our Houston bureau. Paul's got a great story in the new issue of Business Week magazine. It's available now on the Bloomberg terminal, also at bloomberg.com/businessweek. And Paul, one of the reasons I love this story is because you really get down to the nitty gritty, but you start with the basics here and really give us an understanding of what LNG is. Because in fact, the export of LNG is relatively new, at least here in the United States. So let's start at the basics here. What is LNG?
Sure. LNG, and thanks for having me on. I worked on this story with my colleague Sergio Chapa, and LNG is liquefied natural gas. The U.S. is the world's top natural gas producer, and for years, what's happened with the natural gas produced here, especially in the Permian Basin of West Texas, is that there has been just so much natural gas produced that much of it has been vented or flared because prices were so low, and it wasn't economic to build pipelines to take this cheap natural gas to market. And so what LNG companies have been pushing for over the last decade or so was to get this natural gas to the market. And you can't really transport natural gas easily like you can with crude oil, right, and crude oil tankers. So what LNG companies do is they take this natural gas from the Permian, they bring it to liquefaction plants along the Gulf Coast, they supercool it to negative 260 degrees Fahrenheit, so that the gas becomes a liquid, and then they put that LNG onto these refrigerated tankers, and they basically export it all around the world, where at the destination they put them through the regasification plants and basically turn that LNG back into natural gas to be used in homes and businesses.
So is this a long-term solution? Does it make sense for the U.S. to be ultimately, if we could just do it overnight, but would it make sense for the U.S. to be supplying LNG to Europe over the long term? And is there going to be the funds maybe provided to do it more easily?
Sure. Well, it totally makes sense for the U.S. to, export more LNG, right? The Europeans are willing to pay the high prices because they've got a supply crunch. They're trying to wean themselves off the natural gas. But the trouble is that it's not easy to do that very quickly and very easily. It's not like you can flip a switch and you can get more LNG out of the U.S. and export it around the world to wherever it's needed. Building these LNG terminals and plants takes a lot of time, first of all. Each of these plants have these trains, these liquefaction plants and units that, each one takes at least 2.5 years to build. And then it takes a lot of financing to build these, billions of dollars. The Venture Global's Calcasieu Pass export terminal under construction in Louisiana is costing $5.8 billion. And so, and to get that financing approved by lenders and investors, you need to have these long-term 15 to 20-year contracts to buy LNG. And that's the difficult part, especially...
Paul, I love this story. I am learning so much here. It's so specific. What I'm curious about is we're supposed to be moving towards alternative energy as a globe, as a world. So help me understand that. Will there be the commitments to do these build-outs that cost a lot of money, especially when we're talking so much about alternative energy? Or is this kind of a get real moment that, folks, alternative energy is going to take a lot longer than we all thought? And it's going to take, and I just got about 40, 45 seconds here.
Sure. Yeah, it's definitely a get real moment. Right now there's a huge shift from talking about energy transition to talking about energy security with the Russian war in Ukraine. And definitely, there's concerns about that. But, Europe is committed, and they've moved very aggressively towards, renewable wind and solar. And so that's the problem, right, is they need natural gas right now. But they're moving away from it, and they've pledged to move away from it with their net zero commitments. And so that's the issue is, to get these LNG exports to ramp up from the U.S. to Europe, both sides need to agree to build more of these LNG plants and terminals, and that requires these 15 to 20-year contracts to purchase this LNG that, you're not going to really see that if in 20 years from now, Europe is going to be moving away from fossil fuels.
Paul Takahashi, U.S. Shell reporter for Bloomberg News. Got to leave it there. Great news story in the new edition of Bloomberg Businessweek magazine. Let's get to Washington, D.C. for world and national news. Here's Nancy Lyons.
Thanks, Tim. President Biden is ordering the release of 1 million barrels of oil a day from the nation's strategic petroleum reserve for 6 months. This is in a bid to control energy prices, which have spiked since Russia's invasion of Ukraine. Biden also had a message for oil companies.
It's time to step up for the good of your country, the good of the world, to invest in immediate production that we need to respond to Vladimir Putin, to provide some relief for your customers, non-investors and executives.
Biden says he's proposing Congress approve a use it or lose it fee on companies that sit on wells without using them. The Justice Department is expanding its investigation into last year's riot at the U.S. Capitol and now plans to look into the rally that came before the attack.
Sources tell the Washington Post a federal grand jury has issued subpoena requests to people close to former President Donald Trump who helped with the planning, funding, and pulling off of the rally outside the White House on January 6th. Now, this is a tricky process for investigators Federal prosecutors and the FBI will need to weed out protected First Amendment activity that day, the rights of free speech and assembly, from any criminal conspiracy to obstruct Congress from certifying President Biden's 2020 win. In Washington, I'm Nathan Hager, Bloomberg Radio.
Blue Origin has completed another successful space tourism mission. Blue Origin Chief Architect Gary Lai was among the 5 on board this morning.
Even the entire time I felt I was in zero G, I felt like I was falling towards the ceiling.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. I have to say, someone just tweeted at me, it's not a crisis at the pump. Geez. We've talked
That's interesting.
We've talked about this a little bit. It's not like you go to the pump and you can't fill up your tank.
But I think if you were to talk to perhaps some Uber drivers who are now spending more time,
they probably feel like it's a crisis.
They probably feel like it's a crisis. And I think if you were to
Crisis
talk
of
to a
their
lot
wallet,
of people
maybe?
who live paycheck to paycheck, and who haven't gotten raises that have been commensurate with the increase in gas prices, then they're feeling like it's a crisis.
Exactly. Like it definitely impacts, it plays into inflation and so much more.
But it's not 1970s all over again.
No, we're not odds evens in terms of the license plates. And so that's, I appreciate, your thoughts on that. Thank you, audience, for sending some notes back. Hey, listen, along these lines, we've been talking a lot about the energy markets, what's going on. Chicago's mayor is up to some interesting stuff.
Yeah, Lori Lightfoot, the mayor of Chicago, is dedicating $12.5 million of city and federal stimulus funds to help residents deal with surging gas prices. 3 million people live in Chicago, and Chicago's going to give away 50,000 prepaid $150 gas cards and 100,000 $50 Chicago Transit Authority cards. Residents must have a household income at or below 140% of the area median income to qualify. So it actually goes back to our comment that we were just talking about.
Right.
It's a crisis for people who make a certain amount of money versus people who don't.
To be fair, many of us, you've got a fixed amount of funds to play with every month. And I say play lightly, but, and you've got to kind of make choices.
Well, if you do make over a certain amount of money, Carol,
Yeah.
a much smaller percentage of your income ends up going to costs like food and transportation.
Exactly. No, that's fair. Or housing or what have you. Hey, applications for this program are going to start pretty much at the end of April 27th. Gas cards will be given away via lottery, while the transit cards will be allotted to residents in low-income areas. The average U.S. price for a gallon of regular gas, by the way, $4.23 as of today. In Illinois, the average is $4.46, up from $3.08 1 year ago. So that's a big bump higher. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks stumble while oil slumps. Let's begin with crude. Right now, West Texas Intermediate, $100.52 a barrel. WTI down 6.7% after the president's announcement about releasing reserves from the Strategic Petroleum Reserve. We have got the S&P trading lower by 25 points, down 0.5%. It is the final trading day of the quarter. We're on track for the first losing quarter since the pandemic bear market. We've got the Dow Jones Industrial Average down 232, a drop there of 0.7. NASDAQ down 72, a drop there of 0.5%. 10-year yield is 2.31%. Two-year yield 2.28%. Spot gold down up 0.5%, up $9.10 the ounce to $19.42. While West Texas Intermediate crude again down 6.7%, holding above $100 a barrel. 152 barrel of Brent 107.29, down now by 5.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Hey, listen, we often tap the world of sports for clues on leadership, business trends, investment trends, which takes us to this week's Bloomberg Business Week domestic cover story. It's all about NBA superstar Chris Paul.
The cover says it all. Chris Paul wants to win it all. The story is by Arian Cohen and Joel Weber. Arian is a writer at Bloomberg Business Week. She joins us now on the phone from Portland, Oregon. Joel Weber is editor at Bloomberg Business Week. He's with us in the Bloomberg Interactive Broker Studio. Joel, I want to start with the cover, though, because I love this cover. This is the domestic cover story. Once again, it is available now on newsstands, on the Bloomberg, and at Bloomberg.com/businessweek. How did we get to here?
So Chris Paul is someone that we've watched on TV playing basketball for years. He has just an amazing on-the-court presence. Right now, Phoenix Suns, where he's the point guard, are top seed heading into the NBA playoffs. He has also done something that's pretty remarkable off the court, which is build this little burgeoning, it's not even little, it's huge actually, burgeoning business empire. And that was sort of what we were interested in, because, increasingly we've seen athletes be able to do this where they can sort of create an off-the-court empire, no longer waiting for retirement to do it. And Chris is sort of the embodiment of that. And he's got some pretty interesting mentors, one in particular. Ariane, what did you learn about his approach to business when you got to talk to him?
Yeah, Chris Paul is a really interesting guy. I really enjoyed getting to hang out with him a little bit. Unlike most of the retired athletes' portfolios, when you kind of look at what they own, usually it's like restaurants and, some chain stores somewhere. You don't really get much of a sense of them and their interests. But with Chris, you really get a direct sense of what's in his refrigerator, what he's wearing on his wrist, what he's watching on TV from his investments. One of the first questions he asks when he's considering an investment is, how does this company impact my life day to day? Which is not the question that most investors are asking. And so he just has fingers in everything. He has a large portfolio in plant-based foods. He has his own media company. He has some family and child-oriented apps that he owns parts of, and even like meditation products. So he's just all over the place, and it all is directly connected to his personal interests.
Well, let's go, Joel, I want to go right to this mentor here, because you mentioned he's got a mentor and somebody who you got to speak to. Our audience very familiar with him, Bob Iger. How did this relationship come about, Joel?
So Chris got traded to the LA Clippers a number of years ago, and I think it sort of coincided with a moment where he was also really interested in kind of taking his business game to the next level. And like you do, you just text a CEO, right? Which I thought was an amazing insight.
We all do that.
About Chris. He basically learned, like, if you text CEOs, nobody else is texting them, they text you right back.
Except for annoying journalists.
Which I thought was hilarious. Exactly. So he reached out to Bob Iger, and Bob Iger and he sort of kicked off a relationship that was started, basically Chris was like, hey, I need a mentor. And Bob was like, yeah, I've kind of heard that before. And you're not the first person who's asked this. So I don't know if it was a brush off or not, but basically it stuck. And Bob, who I interviewed, has been genuinely impressed with Chris's business acumen. And what started as sort of a mentor relationship has actually just become a really close friendship, and the two of them talk multiple times a day. Bob watches a lot of the basketball games. His sons are big fans, so it's pretty cool. I did ask Bob if he had a Chris Paul jersey. He said not, but his kids do.
What?
Not yet.
Not yet. Yeah.
I mean, maybe it'd be a good gift to get a mentor. Would be a jersey.
Yeah.
I don't know.
Yeah, I'm sure. If Chris wins the championship this year, I'm sure Bob will maybe I'll check with him and see if he'll put a jersey on for that.
I know we talked about this story earlier, but what sticks with me from this column is what Iger said we talk about jettisoning anything else discretionary from your life except for work and family, because there just isn't room for anything else when either of these guys, whether it's Bob or Chris Paul, when they have this kind of job. Hey, Ariane, let me just come back to you, because there are a lot of athletes who get into investments, right? Successful ones. LeBron has been, on the cover of Business Week as well. What is it that stood out for you with Chris Paul?
He is so personally involved in all of this, and his family is very personally involved in all of this. His brother, CJ, handles a lot of his business ventures, and he's really hand-picking what he does, which is very different from the model that other people have used, where they really sort of assemble a team to make good business decisions. Chris, he spent 10 years, studying everything Bob Iger does so that he can really understand it and make his own decisions and kind of build his own empire.
So, Ariane, a question that we talked about earlier in the day, because we do feature this is part of our editors roundtable in our Bloomberg Business Week weekend show, which will be available starting on Saturday morning. I wanted to talk a little bit about the actual investments that he's made, because it's a really interesting group. You mentioned some of the plant-based companies, Beyond Meat. He was an investor in that, and then the media company. But what is the common thread that runs through these companies?
Yeah, on the court, he has this amazing vision where he can see up close a play or a player, and at the same time kind of zoom wide and see the whole court. And he does the same thing in his investing. He really invests end to end. So, for example, in his plant-based food portfolio, he's got a farm investment called Bowery Farms. He has a seaweed protein investment called Omero Foods right at the beginning of the supply chain. Then you'll find him in supermarkets. He's heavily invested in Beyond Meat and Koya, which is a protein drink company. And then you see him at the end at the kind of delivery side of things, where he's invested in Roots Food Group, which they do prepared meals, and another one called Go Puff, which is grocery delivery. So just his angle and his way of sort of encompassing the whole chain is really quite a strong and notable strategy.
Well, it's a great story. It's the domestic cover story of this week's edition of Bloomberg Business Week magazine, available now on newsstands, on the Bloomberg, and at Bloomberg.com/businessweek. A big thank you to Joel Weber, editor at Bloomberg Business Week, and Ariane Cohen, writer for Bloomberg Business Week, who joined us on the phone from Portland, Oregon.
All right, March is Women's History Month, and every day this month we are celebrating significant moments in women's history. Now with your installment for Thursday, March 31st, here is Bloomberg's Renita Young.
On this day in women's history in 1888, women's rights activists Sojourner Truth and Susan B. Anthony were among key women who established the National Council of Women of the United States. It's the oldest American non-sectarian women's organization. The group was comprised of several women's voluntary organizations with common interests in the educational, political, and social rights of women. The primary purpose of the National Council of Women in the U.S. was to act as a clearinghouse or information bureau for its members so they can broaden awareness of each other's activities and so they could collaborate better, reducing duplication of efforts. That's today in women's history. I'm Renita Young, Bloomberg Radio.
A big thank you to Bloomberg's Renita Young for today in women's history. Well, in just a couple of minutes, we are headed to our TV team for our countdown to the close. Carol, the S&P 500 down 0.5 percentage point.
Yeah, bouncing around. Definitely some risk-off trade today. We're pretty much hovering near our lows of the session. We are down the most on the Dow right now, down 225 points, a loss of 0.6%. We're going to head over to our TV colleagues. We're going to talk about the markets right here on Bloomberg.
Down to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in your trading day, your trading month, your trading quarter. Caroline Hyde, Romaine Bostick, Taylor Riggs, joined now by our colleagues Carol Massett, Tim Stenovic. And we go across our audience platforms, as we always do, TV, radio, YouTube, to look at a pretty muted day in terms of, well, risk sentiment, but some big moves in oil, Carol.
Yeah, it just felt muted, right? And I'm glad you brought up the quarter. I've been thinking a lot about this first quarter of the year, the first 3 months, looking at the best performing names and the worst performing name in the S&P 500. Occidental Petroleum, no surprise, the energy outperformance. Oxy up almost 100%. EPAM Systems, that IT company with a lot of workers in Ukraine, that is down 55%, making it the worst performer in the first quarter of 2022, Tim.
Yeah, this quarter, the first down quarter, or the worst quarter, I should say, in 2 years right now. Hey, I'm keeping an eye on one area of the market that is getting some buying today: airlines, hotels, and cruise stocks. Perhaps due to that decline in oil prices that you mentioned, Caroline, the Defiance Hotel, Airline, and Cruise ETF getting a bid today. At the top of the ETF are cruise companies. But look at that, up 1.2% right now.
Nice, if you can get it, but not enough to pull the overall benchmarks higher. On the downside today, S&P 500 off by 0.4%. We're off by some 16 points overall, and actually volumes down some 16% as well. As we see the Dow Jones Industrial Average also under pressure by 0.5%. Your underperformer of the day, we're off by 163 points there. Big tech trying to fend off some of the losses. We're off by 35 points on the NASDAQ, and the Russell 2000 small caps. Well, actually, yeah, outperformer, but they're still off by 4 points. That's 0.2% lower, Taylor.
I think what is really interesting is on a day when we got the PCE deflator, we got real personal income and spending that fell sort of on a month-over-month basis. This is the individual sectors that feel so defensive, with utilities and staples and real estate, the big outperformers on a day. Utilities, you would expect that as yields come down, but it is those staples that advance again about 0.3%. You migrate down to the bottom. Financials, of course, that's the typical reversal of that bond story. You're off about 1.2%. And then technology as well, sort of hovering right there in the middle.
Yeah, you take a look at, so I've been keeping an eye on some of the kind of retail companies here. Remember, we had that inflation data here that showed that purchases of goods and services, at least on an adjusted basis for inflation, actually declined here. You're looking at Target down about 3%. PVH, which has been under pressure really for the last couple of days, down another 6.5% today. We've been talking a lot about Walgreens Boots Alliance in the previous hour here on Bloomberg Television. Those shares down about 4% here. And I wanted to put Kellogg up here because this just jumped out at me. The shares are up 0.9% here on the day. It's actually up for a 9th straight day here. It's kind of a stealth rally here. This is going to be the longest winning streak we've actually seen for this name going back to January 2020. And it should be pointed out, there are a lot of these consumer staple stocks that have actually held their own here. And I don't know if that's a good thing or maybe a harbinger that investors aren't necessarily as bullish as you think.
And quite an amazing comeback considering it dropped so significantly over at the beginning of the month. Of course, the commodities were weighing overall on Kellogg's and the like. Let's have a look at, of course, Kellogg's is exposed to the cost of commodities. It's the cost of corn, I think, of my cornflakes. I'm looking currently at an extraordinary quarter for commodities overall. This really has been the biggest quarterly gain since 1974. Only really we're going to get up, we've got to see how far that has updated since 230, but overall we have seen the best in decades, at least, when you think of oil, when you think of soft commodities, when you think of metals. There's really been no commodity untouched. Even gold having a great time of it of late, Carol.
Yeah, no, absolutely. And, you know, those inflation numbers certainly hard for anybody to ignore. David Weston catching up with Nathan Sheets over at Citigroup. He's their global chief economist, taking a look at some of the increasing headwinds, he said, for consumers. And he said things are starting to look more difficult for them. Check it out, what he had to say.
The headwinds on the consumer sector are mounting. And part of that is the inflation story and rising energy prices. I think part of it may actually be a fiscal drag, so that the support from fiscal policy that has been so important for the consumer through the pandemic, it's phasing out and starting to even turn negative.
All right, that is Nathan Sheets, Citigroup Global Chief Economist. What's interesting, though, he said that the consumer, though, still has momentum, that they still have some strong balance sheets to play around with, but it's something to think about that the longer this goes on, right, that stimulus, that everybody got during the pandemic, those accounts that have been built up, right, are starting to wane.
Well, when do we start to get demand destruction because prices have become so high that consumers don't necessarily want to drive to places that they're going to drive to, or they're holding back on making purchases because prices have risen too much?
Could you argue, and I'm going to go out on a big limb here, that maybe we're starting to see some hints of that? We pulled up the personal spending numbers from this morning.
Mike McKee this earlier today, and he said maybe. He said with a big caveat that, there were some Omicron effects too.
Yeah, so that's interesting, Tim, because the personal spending numbers look good, but if you adjust it for inflation, it declined 0.4%. And some of the economist notes that I were reading have noted that it's been a deceleration now for about 6 months as prices have surged, I guess, for lack of a better word. But lots of caveats, Caroline, that come with that.
Was everyone just potentially out on spending on restaurants? Potentially as well.
The mix between goods and services did return to similar patterns that we've seen before. You saw services on a real basis finally back up about 0.6% month over month.
But I have to throw cold water on this idea about the household balance sheets and them being strong. I was looking at this data because we've heard this from some other guests here, and you look at the household savings rate, it's really come back down to those pre-pandemic levels. The amount of that is sitting not only there on an absolute level, but even when you look at it as a percentage of household income, it's actually gone down as well here. So I don't think, particularly when it comes to middle class and some of the lower income classes below that, they have as much spending power as a lot of people seem to think they do. And as I think one of you just alluded to, that stimulus isn't there. That's been run through. Most of that money most likely has been spent. The question is, what new money comes into this economy?
Just quickly, did you see, though, the tax return data? The IRS is saying that tax returns are actually higher this year. That could maybe give credence to maybe a one-time cash flow.
Yeah, well, I mean, we could see what happens with that when those firms come in here. So,
source point as I'm trying to file my UK taxes on a day. But Carol, what's interesting amid all of this, of course, is that we've got a president feeling a lot of pressure, trying to alleviate this pain at the pump, this pain in terms of your pocketbook, and he's calling it the Putin pain overall. And really, it feels as though the key move that he made, what is it, 1 million barrels a day of oil to be released from reserves. How much is that actually going to help us when we go to fill up our cars?
Well, you guys have had the conversations. We have too, that it's not necessarily going to have an impact, at least for a few weeks. And then we're going into the summer driving season, which puts added pressure on gas prices. So we shall see whether or not
have you made your summer driving plans yet, Carol?
I have not made my summer driving plans.
I just anyway.
I just walk everywhere.
No, well, me and Carol, we're going on a road trip together. Okay. It's like Thelma and Louise.
Wow, that would be a reality show.
Are you Thelma or are you Louise? Roommate?
I don't know.
Who's Brad Pitt? That's what I want to know.
There will be no
sort of segment.
Who's the Brad Pitt in this?
I don't know. I think we're going down a very slippery slope with this conversation.
Gotta love it when you can talk Brad Pitt and you can talk commodities. All right, we gotta run, guys. We will be back in less than an hour's time on radio, TV, and YouTube. We will count you down to the closing bell on this Thursday.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I gotta say, I'm a little exhausted today, but that's just when the puppy...
Hey, the energy's good.
When the puppy wakes up at 4:30 in the morning. No, but what's interesting is it's been an exhausting first quarter, and it's amazing that we are putting one quarter already in the record books, and it's been a tough one for equities overall.
It has
and just a crazy one for financial markets.
It has been a tough one for equities, Carol, but, I have to say, we're only down 3.8% on the S&P 500 this quarter.
Right, so but it wasn't an easy move.
No, it wasn't an easy move. We're talking what? It was down. We're 10% higher now than we were. We were 14% below all-time highs just a couple weeks ago.
A little bit of whiplash.
A lot of whiplash, yeah. That's a good point.
And we'll see where things go and how much of, I think about when Gina Martin Adams talks about, earnings estimates going up, and it's not just for the first quarter, but second quarter and third quarter. What does this year look like? And will we continue to see some momentum, or will inflation continue to be something that stays around, again, much longer than everyone anticipated?
We talked to
already has, really.
Fiona Conchata from Citi Index earlier today. She was on Quick Take Stock with Katie and me, and she thinks that we'll see a peak of inflation this year, but we could hit double digits before.
Yeah, and you do wonder what does that do for sentiment? What does that do for sentiment? Nathan Sheets over at Citi is talking about that sentiment already seeing some weakness. So you do wonder. You go to the grocery store, you do something, and you see what things cost. What does that do to your psyche in terms of pulling back?
That's what I'm talking about with demand destruction.
Yeah, just gonna say. All right, let's get back to world and national news, and let's get on over to Nancy Lyons. She's in D.C. Hey, Nance.
Thanks, Carol. President Biden says he is ordering the release of 1 million barrels of oil a day from U.S. reserves over the next 6 months. He says it will lay a foundation for the country to achieve independence from foreign suppliers. And it will also give U.S. energy companies some time to ramp up production. But he says those companies need to think about the consumer and not the investors.
No American company should take advantage of a pandemic or Vladimir Putin's actions to enrich themselves at the expense of American families. Investing those profits in production and innovation. That's what they should do. Invest in your customers.
Biden says he'll also ask Congress to charge fees to oil companies that have unused drilling leases on foreign lands. Another round of ceasefire talks are scheduled for tomorrow between Russian and Ukrainian negotiators. Retired Lieutenant General David Deptula explains to Bloomberg what he sees next on the battlefield.
Now that the conflict has exceeded a month, it's moved into a sustainment phase. And that's why it's all the more important to get the U.S. and NATO to give Ukraine more powerful weaponry to take advantage of Putin's military disasters, particularly since Russia's now been stalled.
Retired Lieutenant General David Deptula tells Bloomberg the Biden administration has been smart to share intelligence about the Russians. He tells Bloomberg it's been effective to use truth to reveal that Vladimir Putin has surrounded himself with sycophants who are not sharing Russia's real war losses with him. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar along with Tim Stanvek. We are live in our Interactive Broker studio here at Bloomberg headquarters in New York City. Hey, Apple, there's been a bunch of stories this week, including some exclusives by our Mark Gurman and team. This story by Bloomberg News is about Apple exploring new sources of memory chips that go into its iPhones, including its first Chinese producer of the critical component after disruption at a key Japanese partner exposed the risk to its global supply.
This is so interesting because it's sort of the opposite of what so many companies have been doing over the last couple of years. I believe I was interviewing Nick Woodman a few years ago, the founder of GoPro, and this was when China trade tensions and tariffs were just at its peak. And he was talking about how they were moving production from China in order to avoid tariffs and future disruptions as a result of geopolitical tensions. So let's talk about what Apple's doing, though, because that's the story we're talking about today. The company's considering expanding a roster of suppliers that already includes Micron Technology, Samsung Electronics, and Kioxia Holdings. Lost a batch of output to contamination in February. That's according to people familiar with the matter. Samsung and SK Hynix, the world's largest makers of flash memory, are likely to pick up the slack. Apple remains keen, though, to diversify its network and offset the risk of further disruption from the pandemic and shipping snarls.
Yeah, it's interesting now. Apple testing sample NAND flash memory chips made by Hubei-based Yangtze Memory Technologies, according to those in the know. Apple's been discussing the tie-up with Yangtze, owned by Beijing-backed chip-making champion Tsingshan Unigroup, for months, though no final decisions have been made. So this makes me wonder, okay, so what does Apple see in terms of conversations they are having either with officials that give them confidence that they can make these investments, make these partnerships, and be there for a while?
This is why I say that there's no comparison to the way that companies were working in and with Russia as to the way that American companies work with in China.
Right, exactly.
Completely different.
Right, and many would say that in terms of this global supply chain and the reliance between the U.S. and China, the back and forth, like it's hard to unwind that. All right, you're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 43 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ are all declining. Oil, perhaps the big story today. WTI right now down 6.5%, holding above $100 a barrel. Let's get all the details. Lots of moving parts as we head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks in the red today with the Dow currently down 200 points. S&P's dropped 21, while the NASDAQ is lower by 57. The U.S. 10 yield at 2.33%. Gold is up 9. You mentioned oil. Oil is sinking, and Bitcoin is down by 2.8%. Among the main 11 S&P sectors, leaders were utilities and consumer staples. Financials were under pressure. And leaders to the upside in the Dow, Visa, Amgen, and Cisco, while Walgreens fell 4.4% after earnings and led to the downside. Regarding the Ukraine, Biden said there is no clear evidence Putin is pulling back his forces. And in other news, U.S. mortgage rates soared to 4.67%. That's the highest since late 2018. Wrapping things up, J&J hit a record high. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg type Squawk SQUAWK on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, U.S. President Joe Biden, he had his second booster shot. That was yesterday.
He said it didn't hurt.
You know, every time I got one, I'm like, have you done it yet? Because I look away because I'm a chicken.
So am
and
I.
then they're like, yeah, we're done.
Everyone knows
They're
to
like,
look away when you're getting a shot. Needles are awful.
All right, well, we do know the CDC has recommended a fourth Pfizer and Moderna COVID vaccine for those 50 and older. And we've also seen some data about rises in COVID cases, especially among a younger population.
Particularly here in New York, even concentrated in Manhattan. Dr. Chris Byrer is director of the Center for Public Health and Human Rights at the Johns Hopkins Bloomberg School of Public Health. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Byrer, it's good to chat with you again. You know, it's so interesting because a lot of what I see on social media right now when it comes to the pandemic is people, my friends and acquaintances, testing positive once again. And it sort of feels like, you know, at least from a numbers perspective, we're kind of at that pre-Omicron place that we were at, you know, back in December. And I'm wondering how we avoid another Omicron surge in just a few weeks.
You again. Been calling this epidemiologically is a lull. We've been in a lull, and of course we had that severe Omicron surge, which then rapidly declined. That's what happens, and we've seen that in many countries with Omicron. But what's circulating now is the subvariant, the BA.2 subvariant of Omicron, which, like the parent Omicron, is a very infectious virus. It does seem to bypass immunity. There are more breakthrough infections with people who've been vaccinated. And, of course, the numbers are starting to creep up a bit. So we are worried about that. New York has been in the vanguard of a number of surges in the past.
That's one way to describe it, the vanguard.
Exactly.
I'm sorry, but it's an international travel hub, of course, and it's connected to Europe.
So we keep calling it a global pandemic that we're in because we're not out of it. We're not on the other side of it. And that's why, like, if we ever say, oh, the end of the, you know, we're on the other side of it, everybody's like, where do you live? Because we're still in it. How do you see the rest of the year playing out? Is there a point where we look back at, you know, by the end of the year that we're saying, okay, it's endemic, you know, we're going to have some kind of universal vaccine? Okay, help me here. Yeah.
Well, there are some encouraging things to say. And first of all, to say that for people who are boosted, and of course it's good news about the approval of the second boost or the fourth dose for people over age 50, Omicron itself had quite low rates of hospitalization and serious disease. And that's the same with the BA.2. It is really a problem. And for example, in Hong Kong, where we're seeing high death rates, where you have elderly unvaccinated people. They were very slow to get the elderly population fully vaccinated there. Well, we're not expecting to see as much of that same situation. However, Boosting has been slow. People have not ramped up getting even that first booster dose, so we're only at about under a third of eligible adults being boosted. So the message, I think, really is get boosted now. We need to blunt what is to come. The other reality is that what we've seen in a number of populations is that the natural immunity to previous COVID-19 infections wanes. And the modelers will tell you that the waning of many people in the U.S. who are not vaccinated but who've had COVID is going to really be around June. So the time to get boosted is now, before June and before what looks like the potential for another surge, probably of infections, much less hospitalizations.
Dr. Byra, help our listeners out. I got a text message from my mother-in-law yesterday asking if she should get boosted. She's over 65, and I actually got the same, then asked my parents if they were doing it. They're over 65. My mom texts me back. She says, Dad wants to. I'm on the fence about it. What's the guidance hasn't seemed totally clear here. It was very clear with the first booster, but with the second booster, it's not totally clear.
Well, so the CDC guidance is that it's really, and this, by the way, is based on the data from Israel. Most of this decision has been driven by reports from Israel about how fourth boosters were reducing hospitalizations and serious disease in older people and people with chronic conditions. So really the window is 5 to 6 months. If you are more than 5 months out from dose 3, it is time to consider a booster. If you are 50 and older, and particularly if you have any of the chronic or underlying conditions that are associated with poor outcomes from COVID, that time is now. And it's particularly important, of course, for people who have somebody immunocompromised in the home. Also, people living with kids under 5, because as we know, they're not eligible yet.
Well, listen, we really appreciate your thoughts on all of this, because this is certainly top of mind. Amid everything else that's going on in the world, we are trying to stay on top of this, certainly for our listeners and viewers. Dr. Chris Byra, he is director of the Center for Public Health and Human Rights at Johns Hopkins Bloomberg School of Public Health, of course, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. He joined us on the phone from Baltimore.
One thing that's happening...
So 5 months out, he said, for the booster?
Yeah,
for folks?
after the third shot.
Yeah.
And I think, it all comes, it's all happening at a time when we're seeing, increasing numbers of people not wearing masks indoors.
Yeah.
And in fact, New York City telling young people to wear masks indoors, despite the fact that the levels here still remain low.
Well, we've been masks off, and I've had colleagues even come to me like, I think I'm going to throw my mask back on.
Yeah,
You and I have been kind of wearing masks still. All right, you're listening to Bloomberg Business Week right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, you're listening to Bloomberg Business Week. This story, this next one that we're going to get into, was among the most read on the Bloomberg today.
It's a story by Jenny Serain about Amazon renewing its co-brand credit card deal with JP Morgan and Visa. Jenny's going to be joining us in just a couple of minutes. First, though, a check of the trading day as we are under a half hour from the close of the quarter, Charlie Pellet.
Indeed. We've got the Dow, the S&P, NASDAQ all declining right now. Crude, perhaps the big story after President Biden's announcement about release of reserves from the Strategic Petroleum Reserve. WTI, West Texas Intermediate crude, down now by 6.3%. We do have the price of Brent falling 4.9%, down $5.54 a barrel, 107.91 for Brent. West Texas Intermediate crude holding above $100. Did dip very briefly below $100 with a 99 handle. Right now, 193 on West Texas Intermediate crude. Stocks set for the first losing quarter in 2 years. The S&P lower by 35 now, down 0.8. We have got losses in the Dow intensifying. Indeed, for the broader market, right now we have got the Dow down 304. That is a drop of just about 0.9%, while NASDAQ is down 105 right now, down by 0.7%. Key takeaway, lows of the day, 28 minutes to go ahead of the closing bell. Wall Street, meanwhile, looking ahead to tomorrow morning's jobs report. This morning we saw applications for state unemployment insurance rising by more than forecast, likely a blip in what is otherwise a tight and recovering labor market. Initial unemployment claims increasing by 14,000. That level still low as we hear from Neela Richardson, who is chief economist at ADP, which provides payroll services to companies.
We have a very high quit rate that is elevated. Job openings are hovering near record highs, and hirings are not keeping up with openings. So right now, everyone is very focused, big clients, small clients, on retaining their people and hiring in a highly competitive environment for talent.
After earnings, Walgreens Boots Alliance shares, they are declining now by 4.6%. Apple is exploring new sources of memory chips that go into iPhones, including its first Chinese producer of the critical component. Apple shares down now by 0.8%. Again, recapping equities lower, lows of the day right now and dropping. S&P down 39, down 0.9. Crude, worth repeating, down 6.4%. 10-year yield 2.32%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So among our most read stories on the Bloomberg throughout the day has been on Amazon renewing its co-branded credit card deal with JP Morgan and Visa. Tim, bottom line, it is about bottom lines. It's big business for the big banks that compete for this.
It is. Well, Jenny, I want to get your opinion because a lot of times when you write stories, they are among the most read on the terminal. Oh, sorry. Yeah. I'm so sorry. She's like in our studio and we've been talking to her. So I just think everybody's with us. Jenny Serain, finance reporter for Bloomberg News. She's with us in the Bloomberg Interactive Broker Studio. Jenny, forgive me.
No worries.
I like to be the formal
when you do, a lot of your stories do end up at the top of the most read, and it's one of the reasons we love to have you come on the program. But is it the fact that this is a big part of the company's business, or is it a part that our customers love to read about credit cards?
I think it's a little bit of both. This is one of the most popular credit cards in the country in general, so lots of users of the Amazon Chase card. But I
didn't realize it was one of the most popular. Are you kidding?
I got it.
Do you?
Yeah, 5% cash back on all Amazon purchases, right?
Really? Okay.
Jenny's nodding like
okay,
we're
sorry.
know.
All right,
it's
so
one of the
ahead.
bigger ones. Yeah, and then I think it's also the fact that, last year there were a lot of headlines that Amazon was looking to possibly move this away from Chase, away from Visa. So for a lot of the investors in those companies or employees in those companies, it's probably welcome news that Amazon decided to stick with its longtime partners.
How much does bank make? How do banks make off of this? I mean, every transaction they get a little snippet, right?
Yes. So that's definitely true. I think with this, it's like a really good way to get lots of customers who feel very loyal to these cards because they're usually very loyal to the retailers that are attached to them. So,
well, what about for the banks?
Yeah, so I think it swings both ways. So the banks, they usually do a revenue sharing agreement. They also do a loss sharing agreement. So hopefully consumers can keep up with their bills. But yeah, so these are very lucrative portfolios for both the banks and the merchants that they partner with on these. And so that's why you see there's so much interest in both Amazons, the Deltas, the Americans, the Uniteds of the world. These big card portfolios, they're very lucrative.
But there was some drama in the past few months about this, and that's why I think it's also a surprise to many people, because Amazon in Singapore and Australia last year started imposing small surcharges on Visa transactions, you write, and at one point announced its intention to ban UK-issued Visa credit cards. So it said it was Amazon was not happy about its relationship with Visa at a certain point and is now renewing it.
Yes. So they did get into a little spat for most of for the last few months of last year and starting off this year. They have reached a global agreement, and so I think a lot of folks assumed that the credit card would be part of that, but today really put that to rest and kind of confirmed that no, they seem to be on good footing again, and they've renewed, and they're going to be partners for many, many years to come. So I think it definitely was welcome news for Visa investors and kind of put that worry to rest for a lot of folks.
Yeah, it is interesting. Like, I mean, is there something to Amazon staying with the same banks in terms of, I don't know, does it matter if they move it around? Do customers really care or what?
Oh, I mean, for sure we've seen, I think the last really big portfolio move we saw was when Costco moved from Amex to Citigroup. And that
was a big spat. I remember that.
There was a very big spat, yes. And so sometimes these get really, really angry, and customers like what they like, and they're they don't like change. And so I think whenever a retailer is thinking about this, that's in the back of their minds. Like, if I move from Chase and suddenly have to reissue a whole portfolio of cards, am I going to lose customers? Am I going to upset people? So I think that's always in the favor of the existing partner. You always have that in your corner, but this, at the end of the day, is all about deals and economics, and so that's always a huge part of these negotiations.
One part I think that's really notable about this card is that it's really simple in terms of benefits. A lot of the cards that you write about are the really high-end cards, the Chase Sapphire Preferred and Reserves and the Amex Platinums, and you really have to kind of study the benefits there, like activate them online, and this quarter it's this quarter it's that. It kind of is ever changing.
Sounds kind of annoying. Oh, Amazon's simple.
Amazon's is just simple.
Right.
Yeah. I mean, if you're a big Amazon spender, this is the best card to have, is I think what they want. And so that's why they design it that way. They want their big spenders to feel rewarded and feel loyal, and that's what these cards do.
Do people mostly use it for Amazon purchases or Whole Foods, or do they also use it for everything? Do you use it
diapers.
Do you guys?
But
on Amazon.
Yeah, Amazon more so than Whole Foods, but with online delivery for Whole Foods as well.
Yeah, and this card, so Amazon has actually a lot of credit cards, so this is just one of many that they offer, and this one is designed to also be rewarding on purchases outside of the Amazon ecosphere. So they also give you extra points on restaurants, and I think there was grocery stores in there as well.
And drugstores too.
So I think it's meant to be for more than just Amazon. They have other cards that are really specifically for Amazon.
Right.
But it's definitely lucrative for Amazon purchases.
5 points per dollar spent on purchases at the Amazon site or Whole Foods market stores. That's a lot.
Yeah, if you're spending a lot on Amazon like we are, then adds up.
Yes.
All right, Jenny Serrain, thank you so much for coming in and telling us more about this story. Jenny is finance reporter at Bloomberg News. Check her out at Jenny Serrain on Twitter.
Well, let's get an update on world and national news. For that, we go to Washington, D.C., our 99 newsroom, where Nancy Lyons is standing by. Hey, Nance.
Thanks, Tim. President Biden is authorizing a massive release from the nation's Strategic Petroleum Reserve. He says an average of 1 million barrels of oil will be put onto the U.S. market every day for 6 months. And during that time, he's making it clear he wants oil companies in the U.S. to ramp up their production.
For U.S. oil companies that are recording their largest profits in years, they can put those profits to productive use by producing more oils, restarting idle wells, or producing on the sites they already are leasing.
As for the price at the pump, Biden is suggesting the price could fall anywhere from 10 to 35 cents a gallon. There's new research into an anti-parasitic drug that's gained some notoriety as an alternative treatment for COVID-19.
We're talking about ivermectin, the dewormer that has not been authorized as a COVID therapeutic. Scientists in Brazil followed more than 1,300 patients who took either the drug or a placebo over 3 days. They say ivermectin did not improve viral clearance after a week, speed recovery from COVID, or lower the risk of death from the coronavirus. The study's authors write in the New England Journal of Medicine that their research was double-blinded, meaning neither the patients nor medical staff knew which pills they were getting. In Washington, I'm Nathan Hager, Bloomberg Radio.
It is International Transgender Day of Visibility, and the White House hosted Jeopardy champion Amy Schneider.
Really honored to be here and really grateful
that this is being celebrated and that the trans people are being celebrated in a place like this.
Schneider was the first openly transgender winner of the quiz show. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Oh my God, it is Wacky Thursday. This is what happens, when there's, quarterly, end of the quarter rebalancing. I guess we all just get a little crazy.
Are we talking about compensation?
Oh, well, speaking of crazy, among the most read on the Bloomberg terminal, not crazy, but just, wait, what?
Depends on who you are.
Exactly. Perspective. Miles Weiss writing this story here at Bloomberg, talking about Jamie Dimon. Remember we just talked with the author yesterday about one of the leaders she spoke to about excellence when it comes to being a CEO. Jamie.
I wonder if they discuss compensation. Yeah, probably not.
That was a whisper, bet not.
Yeah, well, we got some news today that Jamie Dimon has received almost $56 million of JP Morgan Chase's stock before taxes from an incentive program that the bank valued at less than half that much just 3 years ago.
Not a bad return. The chief executive officer collecting 398,708 shares last week from a performance award dating to January of 2019. This is according to a regulatory filing. When the board initially created that package, it comprised just over 243,000 shares, and the company said it could rise by as much as 50% if JP Morgan hit certain performance targets, and then the bank did.
And the stock rose, and the company added dividends too. So the result topping the prior year's incentive award, which was worth about $51 million when it paid out last March. The latest windfall was helped by the financial industry's surging business during the pandemic. In both cases, the stock is subject to an additional 2-year holding period before he's allowed to sell it, filings show.
Though Jamie Dimon, we often talk about this when we talk about Bloomberg billionaires in our index here. He's worth about $2 billion. What?
What's interesting about this is he is a lot of the billionaires in the index were entrepreneurs who created their own companies.
Okay.
And Jamie Dimon is one of the few at the top of the billionaires index in the U.S. that is compensated as an executive or an employee.
Right. So what you're saying is actually compensation wealth. But if you think about how long he's been at JP Morgan, he is the sole remaining CEO at a big Wall Street bank that was there at the time of the financial crisis and is still there. So you can understand that wealth accumulation. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Losses are piling up as we head toward the closing bell. S&P now down by 41 points, down 0.9%, taking its loss in the 3 months right now to 4.3%. Dow Jones Industrial Average lower by 353 points, down now by 1%. NASDAQ is down 106, a drop there of 0.7%. Stocks stumbling toward the first losing quarter since the pandemic bear market. Treasuries pairing the worst losses in at least 5 decades. Oil, a major story today, still holding above $100 a barrel. Did dip briefly below $100. Right now, $100.80 on West Texas Intermediate crude, down 6.5%. Crude down $7.04 a barrel as I speak. We've got Brent lower by 4.9%, $107.91 for a barrel of Brent crude. 10-year yield 2.32%. We've got the 2-year yield 2.29%. Again, the equity numbers red on the screen with the S&P down 0.9%. Briefly, spot gold up 0.3%, $19.37 the ounce. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Headlines about Russia's use of hypersonic missiles in Ukraine have fueled fears that the U.S. is falling behind its rivals in developing such weapons. But before pouring tens of billions of dollars into a new arms race, the Pentagon needs to carefully assess how hypersonics would help meet its strategic goals. It could be cheaper and more effective to simply upgrade existing missiles. What's more, U.S. leaders should not lose sight of how destabilizing hypersonic weapons could become. While hypersonic arms control agreements are hard to imagine right now, they may become necessary in the future. Pentagon planners are, of course, right to carefully monitor the threat posed by hypersonics. The key is to avoid a costly overreaction. Foresight and sensible investment will serve the U.S. better than an unfettered new arms race would. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 10 minutes left in today's trading session. Folks, we are at our lows of the day. We're seeing some selling into the close as we get ready to wrap up that first quarter, Tim.
I'm eager to hear what our next guest has to think about this quarter and the remainder of the year. Jimmy Lee is founder and chief executive officer of the Wealth Consulting Group. He joins us on the phone from Las Vegas. Jimmy, how are you?
Great. Thanks for having me on again.
Yeah, it's good to have you back with us. Hey, I'm looking over the notes that you sent to our producer, Paul Brennan, and it's really interesting to me to find that you actually think you're sticking to your outlook that you had prior to the war in Ukraine and not making any changes to it as a result of that, when we're seeing so many changes when it comes to commodities and commodities having their best quarter in years and that leading to a spike in inflation. So why is that?
Well, the war certainly has changed my thinking on the timing and how often and how severe the Fed might raise rates. But still, I believe that there's potential optimism for inflation not being quite as ugly towards the end of the year, even with the war. Now, what's very uncertain is how this war concludes and what the effects of it will be in the long run. But in the short term, certainly oil prices continue to get volatile, and with the news of releasing some strategic reserves, that's helping a little bit. But until the war is over, I don't think that the volatility in oil and gas is going to be over. So I think that's one commodity that's going to continue to see a lot of volatility, and also other commodities potentially will continue to make it go up in price until we get the supply situation and inflation better. But I think that's going to be something down the road that we can look forward to.
Do you think about when you're having conversations about kind of longer term where equities go globally, is this kind of a point in time where there are some really dynamic longer term trends being created, whether it's with energy and whether it's that shift to alt energy, you know, whether it's global supply chains, maybe there's more domestic production being done. I mean, I just wonder, will we look back at some point at this time and say, wow, there were a lot of major shifts that were going on globally, economically, market-wise, that ultimately will be reflected in global share prices?
I absolutely believe that to be true. And I think that, you know, not just from the war in Ukraine, but also from the pandemic. And as many consumers and people realize that a lot of the pharmaceutical drugs that we produce, U.S. companies produce, depend on ingredients from foreign nations that we can't necessarily always count on. I think, you know, a lot of different commodities and different ways that we've made products that we consume here in the United States. I think, you know, industries will change. And the automobile industry, for example, that's been reliant on semiconductors and chips and all those different types of commodities that they rely on to, you know, produce a vehicle they can take off the lot. I think a lot of those industries are going to change in the supply and on how they look at their supply chain.
Right.
And as consumers, we may end up with higher prices at the end of the day as a result of that. But I do believe that we're going to see a trend, and I don't think that's going to stop, actually.
Well, higher prices for how long, Jimmy?
Well, you know, globalism has had a lot of advantages. And over the years, I think really the U.S. has been a benefactor of that. The consumer has been a benefactor of that. But I think there's some negatives to that, as we're seeing now. When you have disruptions in the global economy like we've had over the last 2 years with the pandemic and now this war in Russia, in Ukraine and Russia and what's going on geopolitically and the ramifications of that on a global basis for the economics, for the world of economics, right? So I think, you know, it's a longer term trend. So I don't think we're going to see anything immediate because, as you know, factories and manufacturing take years to evolve. And so I think it's going to be something that's more of a longer term trend. In the short term, I think it's going to be continued. We're going to continue to see what we have in the past. And I'm just hoping that the supply situation gets better. Prior to the invasion into Ukraine, the shipping prices that we track were coming down substantially. Other commodities were coming down. And so there was some optimism there. And I still think that equities are a great place to be. I'd be very cautious as a bond investor. Bond investors have been very, you know, they've been hit this year so far.
Yeah.
More than they thought that they could get hit in some of the bonds that they own. But from an equity standpoint, really you have to focus when you get past the war on the Fed. And in past hiking cycles, since like 1982, in every cycle, stocks were a good investment to own. And actually growth outperformed value, even though we're overweighted in some of the economy opening value sectors.
Right.
Growth performed very well. So I think that actually investors will get back into the growth names, but maybe not the names that they rallied into during the pandemic that where we saw sky high valuations and really investors have devastated some of those stocks.
Hey, I just want to let our audience know that we're seeing some selling into the close here. So we've definitely picked up some downward momentum here. We're now at our lows on the S&P, the Dow, and the NASDAQ down about 1.3% on all of those major averages. Actually, the NASDAQ down about 1.25%. But nonetheless, whether that has to do with some end of the quarter adjusting perhaps, but we are definitely seeing some selling. Hey, Jimmy, just got about 40 seconds left here. So if you had to put new money to work, would big tech, mega tech, which has had quite a bounce back, would that be on your buying list?
It is, but I think very selectively. So I think this year is a year where active investors, portfolio managers can shine. And so I think just going into tech is not good enough. And selectively buying companies that have good earnings and quality growth is where the money's going to be going towards. And I'll say that I think with now the kind of hawkish sentiment that you've heard from Chairman Powell, he's given himself some room on both sides, either to when maybe the Fed does increase rates, you know, if they do 50, most likely, and then but also then to back off later on, depending on what the economic data is. So I would be a buyer on these dips.
Got it.
I know it's kind of a cliche. We've been saying this for a long time, but take advantage of it. Yes.
All right, going to leave it there. Hey, Jimmy, thank you so much. Jimmy Lee, he's founder and chief executive officer at the Wealth Consulting Group, joining us. They've got about $4.4 billion of client assets, joining us on the phone from Las Vegas. All right, just a few minutes left, about 3.5 minutes left in the trading session, 2.5, forgive me, and we are at our lows of the session, so we're down about 1.3%. Across the board when it comes to the S&P, the Dow, and the NASDAQ. Right now, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, TV, and YouTube. We are counting you down to the close on this Thursday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Turkey Jerky aficionado Taylor Riggs counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast partners, Carol Massler and Tim Stenovic, and we welcome in our audiences across Bloomberg Television, radio, and YouTube here on the final day of the month and the quarter. Stocks right now around the lows of the day, Carol.
Yeah, we're seeing some selling here in the last few minutes of trading. I've been looking at
rebalancing,
right.
selling.
Well, I know the end of the quarter, right? So it's not a surprise to see that movement. Hey, home builders are what I've been focusing on today. They're down about 4.4% as a group overall. I don't know if you guys saw that story about mortgage rates, highest since 2018. So you're increasingly seeing that take a toll on those home builders. They're down, I think, about 29-30% for the year overall.
Okay, so I've been thinking a lot about the quarter today, and we're down about 4.8% on the S&P 500 quarter to date. But as Carol reminded me earlier, it was a rocky road getting here. We had declines exceeding 13% on the S&P 500, and we're higher now by, 10% from those lows back in February. So
are you an
kind
optimist?
of a rocky road.
Are you an optimist?
I don't know. I just follow the markets. I don't know where they're going.
Well, month on the day, yeah, as you say, up 4% basically, let's call it, on the S&P 500. Similar clawbacks that we saw across on the NASDAQ. So it has been a March to remember, but overall it has been a quarter to remember. And for me, front and center, I know, Taylor, you've been all on the bonds, commodities. I mean, extraordinary first quarter, and no wonder energy is your outperformer.
And from a lot of our guests saying that we haven't actually seen sort of the best in the commodity run, that if you're not in it, it's not too late to get in it. So certainly at least a few people on this program have talked about sort of the room left to run within that commodity space.
All right, well, we are getting the closing bells here in New York on this Thursday afternoon. Of course, March 31st, 2022, the Dow Jones Industrial Average looks like it's going to finish the day down by about 535 points or so, about 1.5% here. That basically brings its decline for the quarter to about 4.6%. Remember, it actually did finish the month of March higher by about 2%. Similar story for all the other indices, which were higher on the month, lower here on the day and on the quarter. The S&P down 1.5% here on the day, down about 5% on the quarter. The NASDAQ composite down about 1.5% as well on the day. It's going to finish the quarter down by about 9%. And there's your Russell 2000. The Russell 2000 moving lower by 1%, lower on the quarter by 7.8%.
All right, Romaine. So no place to hide, it seems, unless you wanted to jump on board a cruise ship, because Carnival, Norwegian, Royal, Caribbean, all of them gaining in today's session. I'll talk about it a little bit more in my gainers, but they were among the top in the S&P 500, Taylor.
Yeah, really interesting. Carol, when you talk about what's on top, you're not getting a lot of that when it comes to the individual sector levels. For the radio audience, the sector winners, the sector losers, 2 notches down to get sort of a broader base view of what's going on underneath the surface, and not a lot of green, no green, in fact, Carol. But still, there were some, I guess, relative outperformers. Food and beverage, utilities, food and staples, those are flat to off about 0.6%. How defensive does that feel, right? As you're thinking about maybe some of the inflationary pressures. And that's in stark contrast, Carol, to the rotation underway within the S&P 500. Down at the bottom, off about 3% or more. It's semiconductors, it's media, and it's some of these tech and hardware. So you're really getting sort of that rotation out of technology, at least for today.
That's a lot of red. It was a little tough finding some gainers, but here's one. It's a small cap, a micro cap, in fact. About 20% of it is the float is shorted, but it rallied big time. We're talking about Clovis Oncology. It's got a drug for ovarian cancer, and They had a good phase 3 trial result. That stock was up about 23% in today's session. I mentioned the cruise ships, Carnival, Norwegian, Royal, all of them top in the S&P 500. Carnival alone was up about 3.2%. You might remember yesterday, Wells Fargo came out with a note, started coverage on Royal and Norwegian, likes them more than they like Carnival, but nonetheless, we're seeing some gains in today's session. And Datadog, we talk about that often here, top in the NASDAQ 100, saw it moving after hours. They announced a partnership with Microsoft and Azure, and so we've seen some momentum in there. It was up as much as 4%, still by the close, Tim, with a gain of about 1.2%.
Yeah, no trouble finding decliners on a day where only 69 of the 505 stocks in the S&P 500 were actually higher today. Starting with Walgreens Boots Alliance, shares falling 5.7% today. This after the company reported earnings. The company's results were actually pretty good on the top line and the bottom line. It was the outlook that left analysts disappointed. They left the outlook for the year unchanged. It suggested that a surge in business that was helped by COVID vaccines and helped by testing is starting to run out of steam. AMD Advanced Micro Devices finishing it down by 8.2%. This after the semiconductor maker was downgraded to equal weight from overweight at Barclays, which said that the growth story, quote, needs a pause. And another downgrade story for a stock moving today, HP Inc. down 6.5%. Morgan Stanley analyst Eric Woodring sees a rising risk of negative hardware budget revisions, hardware earnings revisions, peaking and potential for further multiple compression. Historically, it's led to IT hardware underperformance. So we're seeing shares down for HP Inc. as well.
Analysts giving some reason to be selling today, as we, of course, do see that pressure, that risk aversion just to end the day, the week, the month, the quarter. I mean, at the moment, we're currently seeing risk aversion across the FX space as well. Now, this is as we see perhaps the yen catch a bid. We see the dollar index up about 0.3%. Overall, we've seen in the quarter, of course, yen plumbing the lows of 6-year lows or thereabouts. That more is a story of the Bank of Japan, of course, not going to be moving as hawkishly, nowhere near as hawkishly as the likes of the United States, for example. But really, what's being reflected in the foreign currencies with the Norwegian krone up by 2.6% is actually what happened in the commodity space. Now, the Bloomberg Commodity Index on the quarter has had a stellar one. The best one since 1990, up 25%. On the day, we fall more than 6% on WTI crude. We basically level off at about $100 a barrel. Brent crude off by 5.6%. You know why. The big story of the day was really that extraordinary, unprecedented tap into oil reserves here in the United States is going to come onto the market as soon as May. We're going to be pulling out about 1 million barrels per day to be trying to alleviate the price at the pump here in the United States. That, of course, being the inflationary field that, of course, has spoken so much to what's happening in bonds throughout the quarter, throughout the month. And we're currently seeing, though, at the moment, actually a bid globally. Japanese yields actually plummeting. Swiss yields down by 10 basis points. Over in Norway, up by 10 basis points as well. Suddenly, we get a bid for the UK gilt as well, down by 5 basis points. What about in the US, Taylor?
You know, Caroline, kind of a boring day, if you will, to sort of end the quarter. On the daily basis, you actually had a little bit more of that curve flattening that we've been talking a lot about in the last few weeks, but really when you're looking at the 2s and the 5s not doing much. You are seeing bonds catch a little bit of a bid further out. That's bond price higher, yield lower by about 2 to 3 basis points on the day. But the real sort of superlatives come in, Carol, when we talk about how far we've come for the quarter, the huge rate of change, and then what this means for the world of equities. If there's already been that big repricing, given 160 basis point moves already in the 2-year yield, and what that's pricing in for a Federal Reserve that may or may not be behind the curve.
Yeah, listen, this is right, this conversation, this bigger, broader conversation, we step back, right, and trying to figure out, so maybe the bond market is starting to settle down. Maybe we found our highs when it comes to some of the yields. In terms of the equity markets, guys, I mean, I feel like there's still a very strong debate about whether or not we've bottomed out, whether there's opportunity at this point. Yeah. And I feel like that's kind of the churn right there.
Yeah, I mean, you think we found the highs on the yields? I mean, we still got to wait. Well, okay. I mean, we got a long way to go. I mean, you got a lot of Fed members now rattling the saber, seeming to talk about that we should be closer to 3% by the time we get to the end of the year. But there's a gap there, right, with those projections? Yeah, there's a huge gap, and we know there's not agreement, and we know that there are a lot can change with regards to the economic data that can steer them off course. But when you look at sort of what's moved over the last few months, I mean, just look at what moved this quarter. The top 20 gainers in the S&P 500 this quarter, they're all either energy or commodity related. That's it. That's it.
Caroline to the downside. It was
You
a
like
lot
utilities, Carol?
Do I like utilities? I like when my utilities are on and I get hot water and electricity.
It was a lot of the pandemic winners in technology. Caroline to the downside
You know you have
this
jerk
quarter.
chicken upstairs?
Everybody's been running. Tim has been dying for somebody to go get him some.
Yeah, Romaine walked by our studio with a bowl of something, and I didn't know what it was.
Oh, now.
Yeah.
I tried to give some to Taylor, but she...
It was weird. You only were carrying one, not one for everybody.
It's going to be, you know, guys, it's going to be tricky, though. I really, you know, now again, we're counting down again to earnings and the Fed meeting, right?
Yeah.
Like, what do we get in terms of rich thought about maybe how the rest of the year plays out, Caroline?
And lest we forget, a war happening in Europe, of which we haven't seen in decades, between Russia and Ukraine, what that means for commodity prices, what that means, of course, from a humanitarian perspective, first and foremost, but also what this means in terms of the ongoing narrative on gas prices, on the flight to safety, on whether you want to be in emerging markets or not. It's an extraordinary story that really has pushed and pulled and dictated the entire month of March.
Well, it is really interesting because we spoke to Jimmy Lee from the Wealth Consulting Group in Las Vegas just a few minutes ago about $5 billion in assets under management, and he said that they're not changing their outlook at all as a result of Russia's invasion of Ukraine, which I found pretty surprising.
And I'm glad you brought up emerging markets, Caroline, because we talk about the declines here in the U.S., but it's been really pronounced here for a lot of the emerging market stocks here. I mean, we've had now basically 3 straight quarters of declines. Remember, it was just a few months ago, everyone was talking about this could be kind of the resurgence for a lot of these EM stocks, but of course, with all the ructions in the commodity space and now the war in Ukraine, that's at least being put on hold for right now.
You know what's interesting? The MSCI Emerging Markets Index down. How much do you think, Romaine, this year?
This year?
Yeah.
I don't know, 18%.
7.4%.
Oh, okay, there you go.
At least that's one index, right?
Yeah.
But we know it's a little bit different. Anyway, all right. That's going to do it. Tomorrow's the big jobs report. We'll have lots to talk about, certainly tomorrow. All right, guys, we got to run. That'll do it for our cross-platform coverage on radio, TV, and YouTube. We call it Beyond the Bell. We'll be back same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Caroline telling you can go run, get your beef jerky, or whatever it is.
I don't know. It's okay. We have good snacks. We're lucky.
Oh, my goodness. What a first quarter. I was just tweeting out NASDAQ Golden Dragon Index falls 21% for the worst first quarter since 2008. S&P 500 falls about 5% for the worst quarter since March of 2020. NASDAQ 100?
Falling 9% for the worst quarter since March of 2020. A lot of superlatives on this last trading day of the quarter.
But that March 2020 makes sense.
Yeah.
I mean, everything shut down because of the pandemic, so we understand why that happened, but some big moves.
Let's get to Washington, D.C. for a check of the latest world and national news. There we find Nancy Lyons standing by. Hey, Nance.
Thanks, Tim. President Biden says he's taking action to relieve the price of gas at the pump by tapping into the Strategic Petroleum Reserve.
Today, I'm authorizing the release of 1 million barrels per day for the next 6 months, over 180 million barrels.
Biden says in 6 months, gas companies should be able to ramp up production to meet the nation's need. And he admonished some gas companies that are refusing to increase supply so that demand soars along with their profits. Well, there are also some major concerns about global food security due to Russia's war in Ukraine.
About 400 million people are dependent on Russia and Ukraine for food, but now the world faces soaring prices, fertilizer shortages, and a potential loss of food production because of the war in Ukraine. Syngenta Group says even before the war, the world was facing a food crisis as prices continue to surge and hunger is on the rise. Syngenta says it's providing seeds and crop protection products to farmers around Ukraine for food production. In Washington, I'm Amy Morris, Bloomberg Radio.
Republican Senator Lindsey Graham says he will not vote for Supreme Court nominee Ketanji Brown Jackson. He expressed concerns about her record despite supporting her confirmation as an appeals court judge last year. The South Carolina senator's announcement today was expected after his criticisms of Jackson during her 4 days of hearings last week. And on this International Transgender Day of Visibility, it was announced Fox News has hired Caitlyn Jenner, the transgender former Olympic gold medalist, as a contributor. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. So let's not forget, this is Friday's Eve, which means also we're getting ready for the monthly jobs report. We'll get that tomorrow because we're wrapping up the month of March, and the first Friday of every month we get that monthly jobs report. So we will be all over it, and it has certainly, it's a key economic data point. We also got some other data, though. We've talked about it a little bit today when it comes to personal income and spending.
I've probably looked at this story 6 or 7 times today.
Did you really?
Because it has so much great data in it. It's by Reed Pickard, who covers the economy for us here at Bloomberg News. U.S. inflation-adjusted spending falling as prices temper demand. Consumer spending declining in February on an inflation-adjusted basis. That suggests that the fastest pace of price increases in 4 decades, it's starting to temper demand.
Yeah, I mean, basic economics. My daughter's taking economics. It's her first year in college. She's loving it, but like we're studying together a little bit.
that must be like kind of nice for you, actually.
Well, it's really kind of funny because
go back. It's
she's kind of understanding supply demand, and she's explaining it, and I'm like, this is our world to some extent.
Yeah, I wish I could take these classes now.
We are seeing it play out in real time. I mean, there's some nuances, no doubt about it. So purchases of goods and services adjusted for changes in prices fell 0.4% from the prior month, following a 2.1% jump in January, according to Commerce Department figures that we got earlier today. Spending on goods settling back after the prior month's surge, while a decline in COVID-19 cases supported a pickup in outlays for services. This is why I think the pure data points that we start to get that aren't affected by the virus, aren't infected by things, we'll get a real truer picture of the economy.
You often remind us when we're talking about inflation, Carol, what the Fed keeps an eye on. The Federal Reserve uses personal consumption expenditures, price index. That increased 0.6% from a month earlier and 6.4% from February 2021. That's the most since 1982.
Yeah, unadjusted for inflation, spending advanced 0.2% from January, incomes rose 0.5%. Like, this is real stuff, you know. What are people making? What are they spending? That gives you an idea. And if we start to see a strong trend line, can also determine maybe what's going on a little bit later in terms of the U.S. economy. All right, you're listening to Bloomberg Business Week. We'll get an idea on spending. That's coming up next.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. We close the books on the first quarter. It is on to the second quarter and the month of April. April Fool's Day tomorrow. Stocks tumbled into the close, wrapping up their first losing quarter since the pandemic bear market. First quarterly loss in 2 years. Treasuries also paired the worst losses in at least 5 decades. S&P down 72, a drop today of 1.6%, ending the quarter with a loss of almost 5%. The Dow today down 550, lower by 1.6%. NASDAQ down 221, a drop there of 1.5%. A lot of selling in the final few minutes of trading. 10-year yield 2.31%. The 2-year yield also 2.31%. We've got spot gold up 0.2%, 1937 the ounce. West Texas Intermediate crude dropping 6.2% today. WTI back above 101 a barrel, 101.13 right now, down 6.69 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. So Academy Sports and Outdoors reported earnings earlier this week. Its stock rallied more than 9% on the news. That was on Tuesday. The results causing 5 analysts to raise their price targets on the stock by an average of 11%. Stock is up nearly 50% over the past year compared with the S&P 500, which is up around 15%. And the stock in what was a down day today actually eking out a 0.6% gain for the Thursday session.
Ken Hicks is Chairman, President, and CEO of Academy Sports and Outdoors, joining us on the phone from Texas. Ken, how are you?
Terrific. How are y'all doing today?
We're doing really well. What's working so well for you guys?
You know, we're just fortunate in the fact that we sell fun and people want to have more fun.
Well, that's true.
So true.
But they don't necessarily want to do it. I mean, I think it's so interesting because, you know, during the pandemic, so many people started spending time outside in a different way than they had done perhaps ever. And we saw this rise in e-commerce, and you're sort of taking a different approach, doubling down on physical retail stores and saying that you're going to open 80 to 100 new stores over the next 5 years. Why are you so bullish on physical retail space?
Well, first of all, a lot of the things that we sell, people want to touch and feel, like a baseball bat or a fishing rod. Second, a lot of it's very difficult to ship. It's really tough to ship a kayak or a treadmill. And the third thing, quite frankly, we're only in 16 states right now with 259 stores, and we've got a great model. Our average store does over $25 million, and we've got, you know, a lot of the rest of the country to grow into and to fill out some of our existing markets. And at the same time, you know, we're growing our .com business and truly omni-channel, and we had a very good fourth quarter, up over 20% with our .com, where many other retailers were down on .com.
How many .com purchases were there for canoes? I just want to know.
A lot.
Okay.
Really?
But
yeah, well, it's you know, the thing is, a lot of people took up new hobbies during the pandemic, and they're sticking with them, be that fishing or hiking, camping, different sports, exercise, and we're seeing the benefit of that as people stick to their, you know, the thing that they started. Plus, you know, the trend for wellness and health has been going on for some time, and that's where we are. We sell to, you know, families, you know, the moderate to upper moderate customer, and we have a lot to offer in our stores, from, as I say, sport, camping, or just, you know, backyard grills and patio sets.
you got to be happy, too, that the S&P Small Cap 600 said we're going to put you in the index, right? You guys got some juice off of that one, too.
Yeah, we did get a little juice as we went into some of the funds, but I think those funds are now very happy they put us in after the last week.
Hey, Ken, how's your supply chain? You know, we've been, I don't mean to sound
obsessed
like a broken record, but
there.
absolutely obsessed with supply chains. We're asking everyone, how are you making sure that your shelves are full?
It is a challenge, and there are some categories that are just, you know, really, really difficult. One of them this year is cleats. There are just no cleats anywhere for kids who want to play baseball. But overall, we're in a much better inventory position, and we've taken a number of actions. One is we're ordering our merchandise early and working with vendors who we know that can supply. Another is we're using some of the secondary ports. We're located in Texas, and we use Galveston. We use Charleston. And so we're able to get the goods in more. And we're working with our shipping partners and trucking partners with long-term contracts to make sure that they have the capacity to give us to get the goods to the stores.
Did you say nobody has kids' cleats?
If you don't have them by now, it's going to be very difficult to get baseball cleats this year.
Wow.
What are you rethinking, if at all, about, Ken, your global supply chain in terms of where it exists?
Well, one of the things is our supply chain in particular. We're fortunate in that we're not as dependent on some of the very busy West Coast ports, but also we've got 3 distribution centers that are along the southern part of the country, and we're looking to grow more north and further east, and then ultimately west. And we're going to have to build some new distribution centers at some point to be able to service those new stores. Right now, we have enough capacity, but with our growth plans, we're going to need to continue to step up our supply chain capabilities.
So if I look at your website, we've just got about 40 or 50 seconds. You know, there's lots of categories. There's backyard, there's recreation, there's health, fitness, men's, women's, kids. Which is your busiest vertical where you're seeing the most growth?
Team sports, footwear, and apparel right now.
And where are you not seeing growth?
In some of the fitness categories, those are a little bit more challenged. But we expect some of the categories as the weather gets warmer, like fishing and our backyard and pools, that should start to take off again.
Well, I just love that people are online ordering canoes. I bought a huge tub online years ago.
You did?
You can
What do
ship
you mean
it.
a tub? Like a bathtub?
Yeah, like you can ship anything. Ken, always love talking with you. Get some great insight on what consumers are up to. Ken Hicks is Chairman, President, and CEO of Academy Sports and Outdoors. As I mentioned, their stock over the past year has been way outperforming the S&P 500, up about 50% in that time frame. S&P just up around 15%.
Good luck if you're looking for cleats.
I know. It's too late, folks. Find another sport. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, we've got another sports story we're going to get to in just a moment. In the meantime, I'm obsessed with watching shares of GameStop in the after hours.
Yeah, GameStop shares jumping 12% on a stock split announcement. The company intending to implement a stock split through dividend. Some headlines coming after the market
Wants to
close.
increase the Class A shares to $1 billion from $300 million. That's a lot.
Stock splits after Amazon, Tesla, very hot right now.
Seems to be in fashion. All right, let's get to it. Some more on that and everything else on this Thursday. Hey, Charlie Bell.
Well, hello there. Lots going on. Duck Creek Technologies out with earnings. Shares down 14% right now in extended trading after the application software company reported its second quarter results and delivered that forecast. Lots of moving parts in today's market. Familiar themes. We have wrapped up the first quarter. It is on to the second quarter. Stocks sink to the first quarterly loss in 2 years. For the quarter, let's begin there. The S&P down 4.95%, lower today by 72 points, down 1.6%. The Dow today down 550, down 1.6%. Nasdaq down 221, a drop there of 1.5%. A lot of that selling coming in the final hour, perhaps more accurately in the final 15 minutes of trading. Fast-moving markets today. 10-year yield right now 2.33%. The 2-year yield 2.32%. Gold up 0.2%, 1937 the ounce. But the other big story today, crude energy very much in focus today. West Texas Intermediate crude down 6.5%, falling $7 a barrel, 186 on WTI. Well, as for the overall market backdrop, specifically the earnings outlook, Julie Beal is portfolio manager at Kane Anderson Rudnick.
I think we all can agree that margins are pretty close to peak, and seeing margin degradation is not typically very good for valuations or earnings. We also have concerns about what's going to happen with buybacks in terms of the new regulations. So I think there's a little bit of a concern of what earnings growth really can look like.
Amazon.com is renewing its longtime co-brand credit card partnership with JP Morgan Chase and Visa. It is a multi-year extension. Again, recapping, equities lower today, 10-year yield worth repeating 2.33%, while we're repeating West Texas Intermediate crude down 6.4%, S&P down 72, drop there of 1.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I feel like we're all like good riddance when it comes to the first quarter of 2022.
So long.
So long. Farewell.
There's an article just came out of Reed Spike, Carol. The best you could have done in bonds last quarter was losing 5%. Stocks and bonds. Stocks and bonds.
So you mean a balanced portfolio?
Yeah.
Okay.
But they all can't be winning quarters.
No, they can't be, right?
Maybe I am an optimist.
Okay. Yeah, you are actually.
Maybe.
Hey, certainly more optimism when it comes to pay parity and gender parity in collegiate sports.
Yeah, a few weeks ago, we talked about a Bloomberg Business Week story that had to do with name, image, and likeness when it comes to collegiate athletes finally able to cash in. Well, Carly Wana, media and entertainment and telecom reporter, has a great news story out. She's with us in the Bloomberg Interactive Broker Studio. Carly, good to have you back with us. Your story is about how female NCAA players are set to smash that gender pay gap because of these brand deals. But I want to take a step back for not everyone who's caught up on when it comes to name, image, and likeness, because now college athletes are actually able to do something that they weren't able to do just a few months ago.
Yeah, so the Supreme Court last summer had a ruling that actually made it so that college athletes for the first time could benefit off of their name, image, and likeness. So for March Madness this year, that means that a lot of the players are able to cash in on some really big brand deals for the first time.
Yeah, we talked about it with Ira Boudway and for, was it men players specifically? Wasn't it something
There
like...
were some female players in there, too.
Was there? That's right.
Oh, yeah.
Oh, for all collegiates. That's right. They were gymnasts. And
Yeah.
stuff. Wasn't it like $500 million or something?
The industry is massive.
And growing. So tell us what you found out in your reporting, some of the highlights, some of the standouts, especially for women who we know when it comes to pay, it's not fair or not equal. It certainly hasn't been between men and women in collegiate sports.
Yeah, so we ended up getting data from a firm that they sent us the earning potentials for men and women in college basketball right now, specifically highlighting some of the Final Four players. And what they found was it was actually the women's basketball players who had higher earnings potentials and were more marketable than were the men. A lot of that was based off of higher social media followings for the women. And I will note, though, that men's college football is still the most marketable as far as their earnings potential, but women's college basketball is second, and men's college basketball is a close third.
This is so interesting. Is it all because of the number of followers?
It's not just because of number of followers. That is a really
because
big
engagement
factor.
is really important too, right?
Engagement is so important, and they made a really interesting point too. One of the analysts said to me that it was that the women often curate their profiles more like influencers and market themselves a little bit more distinctly, so that then they're able to build a bigger brand that is more attractive for companies and also increases their following count too.
So who are some of the individuals that really stand to benefit because of this financially?
Absolutely. Paige Beckers for University of Connecticut. I mean, she has close to 1 million combined followers between Instagram and Twitter, and that has meant that she's gotten huge deals like Gatorade or other companies that are just really interested in partnering with her too. Cash App is another one. For the men, leading them was Paolo Banchero of Duke. He was the first active college basketball player who will be featured in NBA 2K, which came out last year.
Okay, and we're talking, they're paid per post usually, right, when it comes to these social media. The woman who's number one, who has 1 million Instagram and Twitter followers, how do I say her last name? Paige
Beckers.
Paige Beckers. $63,000 per post?
Yeah, I mean,
that's just massive.
Insane. I mean, her follower count really is huge, and she's been able to grow it. So it's really beneficial for companies. And I mean, the Gatorade ads are really cool, and obviously that's just a huge, very sporty company, but not all of the companies that are sponsoring these athletes are incredibly sporty. I mean, DirecTV is a sponsor of some of them. Outback Steakhouse signed a bunch of them.
Onion.
We talked about Outback Steakhouse with Ira
It's huge, right? They've been involved, for years, right, with collegiate sports in terms of, I think, doing things, but now they're much more closely tied to individuals. What?
Carly, what about TikTok? Very briefly, 30 seconds.
Yeah, definitely. TikTok's a massive one too. That's another one where a lot of the female players have been able to cash in. So there was one player who she was able to film her pregame routine for DirecTV, and it showed her carbo-loaded meal, her teammate braiding her hair. So there's a lot of interest there as well.
Do you think she was eating, what were we just eating?
Bloomin' onion.
No.
Oh, I don't know what we're
Jerky?
eating. It was really good. Jerk chicken.
It's a jerk chicken.
It's so interesting, though, because then it's like you have DirecTV associated with a post like that, right? And it's just fascinating stuff here.
Well, and it's interesting to see the ramp up in it so quickly, right? As soon as the Supreme Court and the ruling went through, because we've been talking about NIL for a long, long time, and then to see it actually pan out. Carly, thank you so much. Really fun. Carly Wana, she's media, entertainment, and telecom reporter at Bloomberg News here in our Interactive Brokers studio.
Well, let's head to Washington, D.C. now to our 99.1 studio for Check the Latest World and National News with Nancy Lyons. Hey, Nance.
Thanks, Tim. President Biden is ordering the release of 1 million barrels of oil per day from the nation's Strategic Petroleum Reserve. And this is going to happen for 6 months in a bid to control energy prices. Those prices have spiked since Russia's invasion of Ukraine. Biden also had a message for oil companies.
It's time to step up for the good of your country, the good of the world, to invest in immediate production that we need to respond to Vladimir Putin, to provide some relief for your customers, not investors and executives.
Biden says he's proposing Congress approve a use it or lose it fee on companies that sit on wells without tapping them. The Justice Department is expanding its investigation into last year's riot at the U.S. Capitol and now plans to look into the rally that came before the attack.
Sources tell the Washington Post a federal grand jury has issued subpoena requests to people close to former President Donald Trump who helped with the planning, funding, and pulling off of the rally outside the White House on January 6th. Now, this is a tricky process for investigators. Federal prosecutors and the FBI will need to weed out protected First Amendment activity that day, the rights of free speech and assembly, from any a criminal conspiracy to obstruct Congress from certifying President Biden's 2020 win. In Washington, I'm Nathan Hager, Bloomberg Radio.
Blue Origin has completed another successful space tourism mission. Blue Origin Chief Architect Gary Lai was among the 5 on board today.
Even the entire time I felt I was in zero G, I felt like I was falling towards the ceiling.
Lai has been with Blue Origin for 18 years. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic in our Interactive Broker studio. So we talked earlier about soaring mortgage rates. They have moved up dramatically, and we've seen pressure on home building stocks. It's also denting the vacation home market.
So if you are in the market for a vacation home, then that means that if you're willing to pay a higher mortgage rate,
you could get some deals.
Maybe. Let's go into the data here. So demand for second homes in the U.S. is plummeting as mortgage rates climb steeply, Carol, as you mentioned. After a pandemic buying frenzy, mortgage rate locks to buy second homes dropped last month to the lowest level since May of 2020. That's according to a report by Redfin. While demand was still up 35% from February 2020 before COVID-19 hit the U.S., it was significantly lower than the previous month's 87% jump. That's according to the brokerage. So still higher than pre-pandemic and higher by a lot.
Right.
But I'm glad we're doing this story because I've been talking a lot about
buying your vacation home?
No, about the housing crisis in the U.S. And I'm wondering if we're starting to see mortgage rates, because we're seeing mortgage rates go higher, I'm wondering when we start to see housing prices fall. And I say start to see because we are not seeing it yet. So the dynamic at play right now that we're seeing.
Right, we have home price data this week, and it was pretty high.
It was pretty high. So because there's such a supply crunch, we're not yet seeing higher mortgage rates decrease the cost of housing.
Yeah, enthusiasm for vacation homes. We did know they shot up. During the pandemic, remote workers, who didn't have to be at the office, couldn't be at the office. Everybody was moving out to suburbs, but also thinking about, well, why don't I just buy a vacation home? And that's where I'm going to work for a while. Escalating prices driven by fierce competition. Tim was just talking about this. For a tight supply of listings and a recent surge in mortgage rates have slowed the boom. We will see Freddie Mac's average 30-year mortgage rate hitting a record low of 2.65%. That was back in early 2021. It's very different. Borrowing costs shooting up, landing at 4.67% this week. That's for a long-term mortgage.
You can still buy yours with cash, Carol.
Duly noted. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. GameStop shares now rallying 13% after hours after the video game retailer said it plans to implement a stock split through a dividend. The Dow, the S&P, NASDAQ all lower today, with the indexes capping their worst quarters since the onset of the COVID-19 pandemic, amid worries over soaring inflation, rising rates, and a slowdown in economic growth. Today, the S&P 500 index was down 72 points, a drop of 1.6%. The Dow down 550. Late day selling. Final hour, we saw a lot of selling, with the Dow down 1.6%. NASDAQ today down 221, a drop there of 1.5%. Those stocks have been bouncing back in recent weeks. S&P 500 ended the first quarter down 4.9%. The Dow on the quarter down 4.6%. NASDAQ on the quarter down 9.1%. 10-year yield 2.33%. 2-year yield also at 2.33%. Spot gold up 0.2%, $19.37 the ounce. Crude, a major story today, dropping 6.5%. West Texas Intermediate crude, $100.80 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we recently mentioned that the Caribbean islands belonging to the estate of Jeffrey Epstein are for sale, which may cause some to raise eyebrows among buyers because of their connection with Epstein, right?
Not the only reason they're raising eyebrows. Part of the other reason is because of how much they cost. It's a story written by James Tarmy. He's the arts columnist for Bloomberg Business Week. James is with us now in the Bloomberg Interactive Brokers studio. So, James, Carol and I talked about this story a few days ago, maybe last week, when it went on the market, because it was news that they even hit the market. What can you tell us about $125 million for the islands?
Well, cumulatively, the two islands span about 230 acres or so. There's two islands. They're both very, very close to St. Thomas, within shouting distance, really. It's like a 5-minute boat ride across a body of water to get from St. Thomas to Great St. James, which is the larger island. That one Epstein bought quite recently, and it is basically undeveloped. The smaller one, aptly named Little St. James, has a compound on it, guest cottages. That one was developed when Epstein bought it. It already had a mansion on it. And then he kind of made improvements, with scare quotes, obviously. So the smaller one he bought in 1998 for $7.95 million. And then the larger one, which is 161 acres, and the undeveloped one, he bought in 2016 for $22.5 million. So together he had around $30.5 million into it. Yeah. So $125 million represents a pretty humongous premium. And that's what this article is about, because frankly, a bunch of private island brokers looked at this and were just jaws hit the floor, not because these things were selling, but because people were asking the $125 million for it, which just doesn't add up.
Why do you think they're asking so much money for it?
Well, so I talked to a lot of different brokers down there, and they said that what you have to do when you're pricing, no island is alike.
They're all snowflakes, James.
Exactly,
regardless of how much money they sink into them.
It's delicate and pure. That's absolutely true. Well, so you have to look at some sort of comparable. And everyone referenced a sale in 2014 that everyone spoke about, but I was not able to verify through British property records, of an island called Little Thatch Island, which sold apparently, it's a 55-acre island, and it sold for $1 million an acre, for $55 million in 2014.
So then this would be a steal,
So
right?
that would be a steal. However, that seems like much more of an exception, that sale rather, an exception than the rule. There's currently another island literally around the corner from these other two, which is on the market for a much, much more reasonable price. Officially, it's price upon request, call it around $20 million. And that's for an island that's about the size of both islands combined. Yes, it's not developed, and you have to put significant amount of money into it.
Yeah,
but,
like a sewer system.
right. Well,
among many other things.
Among many, many
Well,
other
you just live like Survivor.
Right.
I mean, the last time we went island shopping, I mean, all I cared about was the kitchen redone. But I mean, what's kind of wild is, I mean, there aren't tons of islands out there, or are there?
So there are a ton of islands in the Bahamas, but there are not a ton of islands in the U.S. Virgin Islands. And so it's pretty hard to put an accurate price on this. Some brokers with whom I spoke said that the $125 million was effectively a form of price discovery. Shoot really high, hope that someone basically says that they'll go for it, and then be very willing to take a lot of price cuts.
Wouldn't somebody be able to, and forgive me, I'm not a private island broker, but...
You're not forgiven.
But you play one on TV.
I do. Well, today, after reading this story, I feel like I am. Wouldn't it be fair for somebody to say, wait a second, this is Jeffrey Epstein's former property. It should be sold at a discount to what's out there because of the history that's associated with this place.
So not only would that be fair from a kind of general existential perspective, we actually have evidence that there is a sort of Epstein discount that has been built into the previous Epstein property sales. We saw that in New York City when Epstein's very large mansion, which was listed for $88 million, sold for, I believe, $51 million, right? That's a 40-something% discount. And then Epstein's house in Palm Beach also, I think, was listed for around $22 million and sold for maybe $3 million less than that, which is a fairly significant price cut, particularly in the Palm Beach housing market, which is very, very hot. And in fact, the purchaser, I believe, said that he planned to demolish the house entirely and build anew. So, yes, it's reasonable to say that there would be a discount rather than a premium associated with Epstein's name.
Right.
That doesn't appear to be reflected in these prices. And the thing that really surprised me was you would think that a kind of private island would be the most desirable thing in the world, but a lot of people with whom I spoke talked about all of the hurdles involved in owning an island.
Getting there,
and then once you're there, you know, if you don't like reading in the punishing equatorial sun or you know, sitting out on a boat or something, there's not a ton to do when you're by yourself on your private island.
I should be getting paid to go to private islands.
You know, my sentiments exactly.
That's crazy. Amazon doesn't deliver either, does it?
You know,
although it may be.
If you have a private island, you have people delivering stuff for you, Carol.
Yeah.
Okay.
Go ahead. What?
Well, I looked at, so I will say that I was fairly ignorant about private islands before this reporting began. Now I'm slightly less ignorant. To my surprise, most islands come with housing quarters for staff not on the island itself, but on an adjacent mainland. So you don't have to have your armies of live-ins.
Yeah.
The maids' quarters are on another island, basically?
On another island, yes.
My God. Do we expect it to sell at some point?
You know, it's going to. There's just not a lot out there, and islands are in demand right now.
Who's selling it? Estate?
The estate, yes, and it will go to benefit the estate's various financial obligations and legal obligations. They've already said.
Would you buy it?
No way.
Would you buy it?
No, absolutely not.
Carol, would you?
Oh yeah, Carol. What
a lot of silence coming over there.
I would kind of, it would creep me out a little bit.
Sorry.
And I know it's allegations. We don't, right? It's just
yes, it is allegations. And also, to be fair, the other island, which is undeveloped, it's not clear that anyone spent any time on it.
But the idea of having a private island.
Yeah, that's cool.
That'd be kind of cool. I just read my heart out. James Tarmy, we love you. Thank you so much. Check him out. Bloomberg Business Week arts columnist James Tarmy. That's going to do it for Tim and me. Have a great evening. Tomorrow's Friday and the Jobs Report.